Yo, what's up for you guys watching this on the YouTube replay? I hope you're having a good day. The market opens in 15 minutes. So I normally start these streams out by doing a stock portfolio update and stuff, but we're just going to wait 15 minutes for the market to open and we can see how stocks are moving. So I actually wanted to go over one stock before the stream starts. I like doing a stock of the day, and the first stock I actually want to share with you is probably one you've never heard of before. I hopefully want to introduce you to a new stock. This is ticker symbol HCA. This is HCA Healthcare, and there's only one reason I love this stock. We can go to the net income right here. First off, they're printing money. They're making 1.5, 1.8 billion of net income a quarter. And let's see how much their dividend costs. So they pay a very small dividend. Look at that. The dividend only cost 180 million, and they're making, 1.8 billion a quarter. The real reason I like this stock is because of the buybacks that they're doing. This is incredible. They spent 2.5 billion just in the most recent quarter buying back their own stock. So if you go to the total common shares outstanding, point being, this is it right here. If you go to the total common shares outstanding, you now own 7.7% more of the company than you did 1 year ago. They have the number one market share for surgical clinics and or like where you do surgeries. Like, they have the number one market share for hospitals and stuff like that. So anyway, they're a buyback machine. They literally bought back 7.7% of the stock. They pay you a small dividend and you get exposure to healthcare. So this is one I'm actually considering putting this stock in my Roth IRA. I don't own this one, but this one screams high quality. So that's one I'm definitely going to be checking out a little later. Yeah, what up, guys? Happy Sunday. Yo, what up, Gabe? Yeah, we'll look at Oscar and NVIDIA. I want to check out all these stocks. So you know what? I'll go ahead and, since we're on the healthcare topic, I'll go ahead and pull up OSCR right here. So this is a Medicare Medicaid stock, and regulation is not in their favor right now. So government's kind of coming after them, and not just them, like United Health, Celestica, all those other like Medicare, Medicaid providers. And this is why I still like this one. Out of all the other ones, I would consider buying Oscar because of the growth here. Yo, try not to spam there. Hold on, I see HUD 8. Hold on, let me mute this guy. So anyway, yeah, if we look right here, the annual revenue, incredible growth. For the full year 2020, the revenue was 590 million. Now for the full year 2024, it was 9.2 billion. I mean, that's incredible growth. I mean, if we just look at it just in the most recent quarter, the revenue was up 42% year over year to $3 billion. So incredible growth over there. And they're just now starting to get net income positive. Like last quarter, they lost money, but the trend is getting better. The net income's up 55% year over year. So Oscar's one I do like, but the reason the stock is falling so much is because of the uncertainty of the future. Because the government's not too happy with them and United Health and the margins that they have. So yeah, let's go look at NVIDIA real quick. So NVIDIA, the market opens in 10 minutes. We'll see how they open, because if we look at Bitcoin right now, Bitcoin and NVIDIA kind of move together, but Bitcoin's at all-time highs. You know what? Let me go pull up NVIDIA or Bitcoin, then we'll go back to NVIDIA stock. So I guess we can go over here and look at it on Robinhood. So yeah, look at Bitcoin right now, $118,000. So congrats if you own any crypto. I don't own any crypto. I mean, I got Robinhood stock, which is kind of like crypto. But anyway, crypto's been on fire. Check this out right here. Let's look at NVIDIA, because this company is at an all-time high. Look at the GPU market share. It's a 20% PC GPU market share. Yeah, hey, Mark, if you go to the link tree in my bio, first link there, it's the software I'm on. But yeah, the PC GPU market share is incredible. 20% GPU market share. We kind of knew that. They also have some automotive software. They partnered with WeRide. They're trying to make like a Waymo, a Tesla robotaxi competitor, because you need GPUs for that. And NVIDIA they make their own GPUs. So they don't need to get it from anyone else. So they can just have that infrastructure. But also, here's why NVIDIA deserves all the hype. If we look at their computer networking revenue, what other company can pull this off? For literally just in the most recent quarter, the revenue was 40 billion, up 75%. It's still growing. That's what's incredible. NVIDIA is still growing. If we go to the net income right here, look at this. They're making 15 to 20 billion of net income every quarter. So that's incredible in my opinion. But it is tough. I wouldn't really be buying NVIDIA at all-time highs, because, the risk reward just doesn't look great here. Like if you're looking for a stock to double, like look at NVIDIA in the top right. The market cap is 4 trillion. For you to double your money, this would have to be an $8 trillion company. So they could definitely do that one day. I've heard that they're probably going to be the first to 10 trillion, but it's I still like NVIDIA. Hey, someone said Sonim Technologies. Yo, Dark, if you got a ticker symbol for me, let me know. I'll check that one out right here. And we'll look at HUD. So HUD, this is the Bitcoin mining company, and I don't really like this one because it hasn't really kept up with the price of Bitcoin. So I'm pretty sure HUD 8 just mines a bunch of Bitcoin. And if we look at the price of Bitcoin like we just did, Bitcoin's been crushing it. Let's see, 118,000, literal all-time high on Bitcoin. But if we look at HUD 8, they're nowhere near an all-time high. So I'd honestly rather just own Bitcoin. But this is kind of like a Bitcoin proxy. So I actually don't know if they mine Bitcoin anymore. I know this used to be a solely Bitcoin mining company, but now they have this compute revenue, power revenue. I actually didn't know about this, so that could be interesting. The revenue wasn't much, though, only 4 million. So yeah, I don't know. I got to do more research on this one. I mean, sales are down 57%. They lost 130. I don't know. I got to do more research on HUD. I'm pretty sure they just mine Bitcoin. Let's see. What about SoFi? Yo, what up, Sewage? Yeah, dude, I do own some SoFi. Yo, market opens in a couple minutes, and we'll see how the market's doing, how stocks are doing. But I do own some SoFi. I might be a little biased, but I absolutely love this company. And if you're looking for a stock to just buy and hold for the long run, I really like SoFi. And whenever you're looking for a stock, like, what is the kind of company that I should buy and hold for the long run, buy and hold forever? In my opinion, it's ones that have great growing fundamentals. Like, check this out. If we look at where SoFi gets the revenue from, obviously they're a fintech. They have their own banking charter. Their financial services revenue has more than doubled, just over doubled. It's up 101% from the previous year. Like, that is incredible growth. That's why I think SoFi deserves this new 52-week high. This is such a growthy company. And if we go look at the net income down here, people are really starting to take SoFi serious. I mean, they're making net income every quarter. People didn't take them serious because they used to lose net income every quarter, and a lot of it. Like, look, 300 mil, a couple hundred mil a quarter, but now they're actually making net income every quarter. So in my opinion, SoFi is one I do like. It is a bit tough buying them at all-time highs, 52-week highs, so maybe I'd wait for a pullback. Under 20 would be great. Yo, Taku A4 said, QS stock. Yeah, this is like your rare earth mineral play right now. They've just exploded because I think QuantumScape, like MP Materials, America wants to start sourcing our rare minerals from the U.S. There's like one little mine in the U.S. that could provide all the precious metals for the next 20 years. And it's like a 1 mile, or not 1 mile, but it's a very small mine. Basically QuantumScape is the play here. But one thing I will be careful of, though, we want to see this company make some revenue. So right now, this is a startup. They literally don't sell anything. They don't sell a product or a service. So if you look at the revenue right here, it says zero because they don't sell anything. So that's the one thing I will be careful of. This is a startup. They are losing a lot of money. 114 mil in the most recent quarter. Yikes. And if we look at the balance sheet right here, this is good news. They actually have no debt at all and lots of cash. So yeah, QuantumScape, they're interesting. All right, let's see. So what? Someone said QQQ. Yeah, hey, here's a quick little tip. Actually, check out QQQM. It's actually the exact same thing as QQQ, run by the exact same people, same NASDAQ 100 strategy, same holdings, same everything, but with a lower expense ratio. You've probably never heard of QQQM because they don't market that. It's also owned by Invesco. Invesco owns QQQ and QQQM. They market QQQ to get the high fees. So actually check out QQQM if you're just looking for an ETF to buy and hold for the long run. Yo, what up, Dryden? I'm planning investing a big amount. That's awesome, man. Eric, what's up, man? He said, I want to look at MRK, then we'll look at Salesforce. Yo, Bruce, we'll look at TOPT. Yo, do you think QuantumScape is worth buying? It's tough after its huge rally, but I'm just going to stay away from that one just because they're a startup. I'd be careful with QuantumScape because they don't have any revenue. So that's one I'm just staying away from. But it is curious. Whenever they start making a bunch of revenue, that the stock's probably going to rocket. So anyway, here's Merck, ticker symbol MRK. This is a healthcare play. They made the Merck pill, red pill. They haven't really been doing too good. Yeah, look at that. But this one's kind of like a dividend play. You get a 3.8% dividend. They raise their dividend every year. The payout ratio is only a 46%. What's the PE? Look at this dog cheap PE ratio, a 12 PE. So anyway, the PE is really cheap on them. Yeah, look at that. Oh, they're in animal health as well. 10% of the revenue comes from animal health. Hey, it's growing like single digits, not bad. And yeah, here's the net income. Wow. 2025 Q1, it was $5 billion just in the most recent quarter. So anyway, that's really impressive net income. Look at that. They're making $4 billion a quarter. That's why they pay those dividends. They're a big company. So let's go look at CRM, Salesforce. So yeah. Yo, I wanted to look at TOPT. Yo, what up, Bruce? We'll look at that one next. And hey, Sam, how's it going, man? Hope you're having a good Sunday. Market opens in 5 minutes. In 5 minutes, we'll go see how my portfolio is doing and all my stocks. But anyway, here's Salesforce right here. This one has been struggling a little bit. Like the AI thesis is probably going to hurt Salesforce. But for right now, this is a great growing company with very diversified revenue streams. Look at this. If we look on this, they're in service, sales, platform, and other. They own Slack. If anyone's heard of Slack before, like Amazon uses Slack. And anyway, look at the annual growth of everything. So here's the service revenue at a record. This is the annual revenue. If we look at the sales, at a record as well. Platform and other at a record. Everything about Salesforce is growing, but the growth is kind of slowed. The net income only grew 0.5% year over year. If you look at the free cash flow, it only grew 3% year over year. So I think investors didn't love the slowing growth here, and this is a high PE stock, but I love that they're shareholder friendly. They're doing a bunch of buybacks. They have a 0.6% dividend yield. Number one market share. How much money is owed to them? They have $60 billion of software. They have $60 billion of money that they're owed, basically, from Salesforce. That's what retaining performance obligation is. So, hey, let's go look at TOPT. So, check that out. I've never heard of this ETF. This is really cool, actually. This is the iShares Top 20 U.S. Stocks ETF. So it's like a Nifty 50 kind of ETF. Yeah, so obviously it's the Mag 7. Then they got Meta, JP Morgan, Eli Lilly. So a bunch of mega caps. I'll actually add them to the watch list just because they're interesting. Robinhood analysis. Hey, you know what? I do own some Robinhood stock. They've actually been my best performing stock. A lot of the fintechs have been doing great recently. So we do own Robinhood. This is my growth portfolio. We have a lot of losers in here as well. I just like being fully transparent. If you look at all time in the top left, I'm only up 10% all time in here. I have for sure underperformed the market. But Robinhood has been one of my best performers, and it's tough buying them like around $100. But this is a company that I believe deserves the high premium. Like, look at this revenue growth. They're such an innovative company. They just released a bunch of new products for EU, but the revenue growth is up 50% year over year. Incredible revenue growth. And this is the most important part. Robinhood is profitable. Look at this. They're literally making hundreds of millions in net income every quarter, hundreds of millions. And this is when I was kind of buying the stock. It was a tough buy. They were losing 500 million a quarter. There was almost like a bankruptcy risk at Robinhood, but that's why the stock has performed so well. They really beat everyone's expectations. So Astral said what app is this? Yeah, if you go to the link tree in bio, first link there, it's a brokerage. You can get this app I'm on. So someone said Shopify. Yo, man, how's it going, brother? So if we go to Kathy Wood's portfolio, I do think Kathy Wood owns some Shopify. Her largest holding is Coinbase because it's done so good. Oh yeah, and she got Robinhood, Roblox. But anyway, she owns some Shopify, and this is my favorite Canadian company. They are Canadian, but I love the growth here. And this is one I'm actually highly considering buying. I would put this one on your watch list. Again, none of this is financial advice, but look at the growth here of the annual sales. I mean, you can't make this up. 2019, revenue was 1.58 billion. For the full year 2024, 8.8 billion. I mean, it just grows to a new record every year. Like, if you're looking for a stock to buy and hold for the long run, I just like showing you the numbers. You got to find ones that have good growing fundamentals, because those are the ones you can't buy, like Lucid. Like, I just like looking for stocks with good fundamentals. So let's see. Think about investing $5K if you feel slow. Hey, what up, Bruce? Hey, that's awesome, man. Let's see. Love the Dave pick. Yeah, dude, Dave has been crushing it. The market opens in 3 minutes. So in 3 minutes, we'll see how the market's doing. Yeah, I actually have a stock I want to share with you real quick, and then we'll go back to your stocks. Ooh, I see Uber, ClearSecure, Coinbase. Remind me, I want to look at all these. But I actually want to go over a stock real quick that I highly recommend you should put on your watch list. This is ticker symbol SEZL. This is a competitor to Dave, but they have like the best fundamentals I've ever seen for a company. They've kind of fallen the past couple of days. So I wouldn't buy this one now. I put it on your watch list in case it goes lower. But here's what I love about them. First off, incredible growth. The revenue is more than doubled. It's up 123% year over year. So they have 104 million of revenue, but the after-tax net income they made was 36 million. Look at that. Look how profitable they are. So they have incredible margins, 35% net margin in the most recent quarter, and the margins keep on growing. So this is just a growthy company with no net debt, and I'm really considering adding them. So anyway, let's go look at, I forgot which one it was, but I'll go look at Uber. And then right after this, we'll look at how the market's doing, because market opens at 8 p.m. on Robinhood, which is cool. So here's Uber Technologies. This is a company I love. Ever since they took a huge stake in Grab Holdings, I mean, this is like a buy and hold forever kind of stock. So first off, we can see their active users. Cool metrics here. Yeah, they got 171 million monthly active users. The business is still growing at Uber. If we look at their mobility revenue, I mean, this is what you want to see. It's up 26% year over year, up double digits. But they also have the delivery business. If you heard of like Uber Eats, that's what this is. And look, Uber Eats grew 18% year over year. That's some incredible growth. So I like looking at the fundamentals. The top line is growing like crazy, but so is the bottom line. Look at the FCF, which stands for free cash flow. This is crazy. They're making like $2 billion of free cash flow a quarter. So crazy profits there. And after tax net income, look at that. They're making over $1 billion in net income a quarter. So Uber is one that I really like. And they just took a huge stake into Grab Holdings, which gives them instant international diversification. I'll go over Grab really quickly. So if you're wondering what Grab is, they do exactly what Uber does. They're another stock as well. And Uber is the largest shareholder here. Oh, if it'll load here. Maybe I'll go to, okay, so yeah, here's Grab Holdings right here. Yeah, if we go to shareholders, the largest shareholder is literally Uber Technologies. So largest shareholder is Uber, and look at what they do. Delivery, mobility, same thing as Uber, but look at all these countries that they're in. Notice the US and Canada aren't on here. So this is an instant way for Uber to get international diversification. Genius. So let's keep going here. So someone said the SOLT ETF. This is Solana ETF. Yeah, so I don't know much about Solana. I know there's like I forget I don't remember what it's called. I actually, a long time ago, I used to stake Solana, probably 3 years ago. But hey, this is a 2x Solana ETF. So if you're bullish on Solana, hey, you could buy shares of that. Let's see. The market just opened. Ooh, we're down 0.1%. Well, we got to give it time. What the S&P 500 open at? So the S&P is down 0.35, which is really weird because if we look at Bitcoin, Bitcoin's at a literal all-time high right now, 120K basically, ridiculous. So we'll come back in a couple of minutes, see how, because it takes some minutes for the volume to come. So let's go look at ClearSecure right here. You know what? I'll look at them on here because I own ClearSecure. This is ticker symbol U right here. What up, Marv? How's it going, brother? Happy Sunday. So this is U. This is ClearSecure. If you've ever been to an airport, you've maybe seen like the people wear ClearSecure shirts. It's like you can get through the airport faster when you go through a ClearSecure machine. No other company could pull this off. It's heavy federally regulated airports, but they pulled it off. And I love, this is why I own the stock. The fundamentals are good. Look at the revenue. It hits a new record every quarter. So first off, really good sales growth, growing double digits, but also the net income. They're really profitable. They're making 30. Look, last quarter made 100 million. And that's how they can afford a dividend. They got a 1.7% yield, not too high of a yield, but still, I love the 2% yield. They're doing buybacks as well, so I do like ClearSecure. So someone said APLD. Yo, APLD is a stock owned by NVIDIA. So let's check this out right here. Do you think Bitcoin is going down a bit because of the tariff? I think Bitcoin's going up because of the tariff news. Let's see real quick. I wanted to go to NVIDIA's portfolio. So yeah, if we go to NVIDIA's portfolio, they're so big, they own some individual companies, like they own CoreWeave, ARM, and their third largest holding is APLD. APLD just went to a huge partnership with CoreWeave, and that's kind of why they gapped up right here. Huge partnership with CoreWeave, and I love the fundamentals here. This is a growth stock that I potentially add to your watch list. Just because NVIDIA owns it doesn't mean you should own it, but I think the fundamentals check the box here. Like, look at the cloud service business. It is literally up 219% from the previous year. I mean, that's incredible growth. It was nothing last year. Revenue was 2 million. Now it's 17 million. So at this growth rate, growing 200% a quarter, last quarter was 500%. What's the revenue going to be this time next year? So this is just a pure growth company right here. They are losing a bit of money, but the thing is they'll outgrow that. And they got NVIDIA as a shareholder. They're partnered with CoreWeave. So I do like that one, actually. So someone said thoughts on Path, UiPath. This is not good. So, my position in UiPath is not good. This is not one I would really recommend anyone to buy, even though I'm down a lot on them. I'm kind of hoping to get out of them. If you're wondering like what happened to the stock, the CEO quit out of nowhere. Like, it looked like a cash grab. It was really weird. The CEO quit out of nowhere, left the management for dead. I mean, wasn't good. But I just can't sell this stock because the valuation is so cheap right now. It would be tough to sell. They actually have no debt at all. I'll be really quick about this, and then we'll get to the next stock. Let's see. So they have $1.56 billion of cash. And if you go to total debt, it says zero because they have no debt. So $1.5 billion of cash, no debt, and the whole company is worth $6 billion. So like 15-20% of the market cap is just cash on hand. They're also a slow grower. So the revenue is only up 6% year over year. That's bad, man. Only up 6.4%, not great. So I'd like to see some growth come back to that one before I'm certainly not adding more to my position. So, hey, someone said, hey, these are all stocks I own. I love this. Let's go back to Reddit. I do own them as well. This is my growthy portfolio. We're only up 10% all time in here, so we've definitely underperformed. But wait, what stock? Well, yeah, Reddit right here. So this is one I do own. I believe this is a $200 stock plus. It could take a year or two to get there, but this is one I really like. So first off, they have no debt at all. Kind of like the other company. Like, look at this fortress of a balance sheet. They have no debt whatsoever, $2 billion of cash, and that cash is also earning interest. And look at the growth. So no debt, lots of cash earning interest, and super growthy. The revenue's up 62% year over year. I don't know how Reddit pulled that off, but revenue's up 62% year over year, and they're profitable. Look at that. 3 most recent quarters, they're making a lot of net income. This one did just kind of have a recent IPO, but this is a real interesting one that I have some exposure to. It's tough buying them here. I am up 49% on them. I would like to see them go a little more, bit lower. Hey, thanks for everyone dropping a like. Hey, what up, Rick? He said, UHN stock. Yeah, hey, you want to help me out? Best way to support me, subscribe to my YouTube channel. It's called Nathan Rob. Wait, UHN, I can't find that one. Let me know if you're probably talking about United Health. So we can look at that one. Jason said ticker symbol now. Hey, this is another software play. This is ServiceNow. What's the market cap on this sucker? Whoa, $195 billion market cap. So this is a huge company, and it looks like they not having a good couple candlesticks there. Let's see. Look at the profits here. Wow, they're making $400 million of net income a quarter. Yeah, geez, what's the revenue growth? Revenue's up 19% year over year. So they're growing double digits. I love the net income growth. What about free cash flow? Wow, the free cash was even better, over $1.5 billion. So ServiceNow is a great one. I don't know about the valuation though here. Let's see. What's a stock on your watch list you're planning on adding soon? Yo, Samir, you would love my most recent YouTube video. A stock I'm literally thinking about buying this week. And you know what? I'll go over them right now because I made this stock will impress you. If it doesn't, feel free to hit the dislike button. This is Delcath Systems. It's risky. If you look in the top right, they're only worth $390 million. So first off, very small market cap, only worth $390 million. But here's why I love them. Look, first off, they have no debt at all and $60 million of cash. I literally just made a whole YouTube video about this stock today. So I'm kind of well researched on it. But the revenue growth is insane. It's up to $19 million. Again, only a $390 million company, but they have $60 million of cash, no debt, growing like crazy, and they're net income positive. Look at that. They're making net income now. So because of the insane sales growth. So this is one that I think literally might have the potential to 2 to 3x. So I don't own them. I don't have any exposure right now, but I literally think by this time next week, I will have some. G said, you're always live. Hey, I appreciate that, man. Yeah. So what's up? BM, yo, what up? Oh, United Health. Yeah, so let's go look at United Health right here. So yeah, hey, I'm always live. If you want to hit the follow button, we go live every day. I sometimes try to stream twice a day. So I'd really appreciate if you hit the subscribe button. I sell nothing. I don't have a course book, literally nothing. I'm just trying to give my opinion. Only thing I do have is a YouTube channel. So the best way to support me, I'd rather you do this than donate me $1. You know, I really appreciate you just subscribe to my YouTube channel. It's called Nathan Robert, Linktree in bio, and go watch my most recent YouTube video. Anyway, this is United Health right here. Obviously, they have not been doing too good, and that's because of the litigation they're in now. So if they get accused of fraud, this is why the PE has literally collapsed. If they get accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years. And that's roughly 50% of the revenue. So that'd be devastating. And that's why we've seen this PE collapse to a 12. Historically, you know, dog cheap valuation for United Health. So that's one thing you do got to know. Also, we're a customer. We actually use OptumRx, and look at this OptumRx growth. I mean, this is probably why the government's not too happy with them. Like, how do you go from $35 billion a year to $133 billion just in the most recent quarter? Also, the United Health business, literally full year did $300 billion of revenue. So this is a giant of a company. And so as long as they don't get accused of fraud or anything, this is a fantastic steal at a great valuation. But the reason the valuation is low is because of the uncertainty. So nearly 3% dividend yield, low payout ratio. So, yeah. So let's see here. Yo, Vincent, we already went over Shopify. I'll look at Shopify in a minute here. Again, but yeah, we literally just looked at them. So someone said BM, or what's up? Acid said BM in our stock. So let's check this one out. So wow, that's actually a big market cap. So $3.3 billion company. That's weird, this price action. I mean, all right, let's analyze them. I don't know why they jumped up so much. So revenue from self-mining. So, okay, this is a Bitcoin mining company or some kind of crypto mining company. So that's one thing you do got to know. So I don't know. So that's where all the revenue comes from. So they're crypto related. I don't know why they rallied up so much. Maybe there must have been some good news, some partnership or something like that. Yo, Mac, what's up, brother? Yo, Kevin said UI stock. Yo, what's up, dude? And thanks for watching my most recent YouTube video. This is UI, and bro, I at one point in time, look at this huge L. I sold this stock at $117, and it's $400 now. So I know a lot about this stock. So we can analyze them. They deserve how good they're doing right now. So check this out. The revenue growth has just been insane. It's up 35% from the previous year. So really good sales growth. And also they have incredible margins. They made $180 million just in the most recent quarter of net income. So if we go to the net margin right here, 27% net margin, that margin grew by 75% from the previous year. So, and they're deleveraging their balance sheet. I mean, this is great news. So UiPath is blown away all analysts' expectations. You also get a small dividend with this company. So I actually really like them. They're kind of like a cheaper NVIDIA, but like you can, it's like servers and all that. So, all right, let's keep going here. SoFi and Zeta. Yeah, we'll look at Zeta because this is one that they are on my watch list because I think this one's just oversold right now. Hey, Mac, how's it going, dude? We'll look at WPM after this. I got you. So this is Zeta Global right here. And I just think this one's just oversold for the good financials here. Maybe there's something I don't know, but look at this right here. If we look at the revenue, it's up 35% year over year. Maybe that didn't meet expectations. No, it did. They slightly missed on net income. So I don't know why the stock fell so much if they just barely missed on net income. So yeah, look at this. The revenue's up 35, incredible growth. If you look at the net income, the trend is getting way better, 45% better. They're barely losing any money anymore. Last quarter, they even made net income. They have a monster of a balance sheet right here. So the cash from operations is insane as well. So Zeta is one that I do really like. Or maybe it's Zeta, or like Meta. So let's look at WPM stock. Wow, hey, look at that one. This one's at all-time highs right now. So congrats if you own this one. Let's see what they do. $42 billion company. So look at this. I actually don't know what this is. Is this like a gold mine? This might be a gold stock. Let me see. Yeah, so precious metals. Okay, yeah, so this is a gold stock. I could kind of tell from the stock price. So yeah, this company basically owns a bunch of gold mines. And if you just look at the price of gold right now, gold is at an all-time high. And I like how many mines that they own. Like it's all not just from one like you'd see in a lot of stocks. But yeah, the net income's really good. And you get exposure to gold with a yield. You get a 0.7% yield. If we literally just look at the commodity of gold, which is ticker symbol IAU, is the commodity of gold. Look at this, it's at an all-time high. So yeah, congrats if you own gold. It's been doing great. Let's see. Yo, what up, Six? He said Red Cat D Pro. Wait, what is D Pro? Yeah, give me a ticker symbol. I'll check it out. So he said this is a drone stock right here. So ticker symbol D Pro. So if we look in the top right, this isn't usually a company I like to cover just because it's so small of a market cap. Yeah, we'll look at SoFi as well. I want to get to all the stocks here. Sorry. And Marty said what happens is it's actually a brokerage. If you go to the link tree in my bio, Marte, it's first link in the link tree in my bio. So anyway, here's Dragonfly. This isn't one I normally cover just because the market cap is $50 million. So this is a $50 million company, but they're in the drone industry. Yeah, look at that. 100% of the revenue comes from drones. How much did they do? So yeah, it's a nothing burger. The revenue was $1.5 million. So it's tough. It's tough, man, to buy this stock. It's just so risky, in my opinion, just because of the small market cap, low revenue. So Mario, what up, dude? He said, thoughts on BRK. Let me know. Are you talking about BRK Brookside? Oh, no, he said BRKB. Okay, okay. BRK.B. So this is Berkshire Hathaway. This is Warren Buffett's company. And actually, here's the weird part. The S&P 500 is at an all-time high or like very close to it. But look at this one. They're not. They've kind of been struggling recently. And I think it's because Warren Buffett just quit or Warren Buffett stepped down as the main CEO of Berkshire Hathaway. And he's like 98, man. I get it. But look at this right here. I love how diversified that they are. If you heard of Geico Insurance is 28% of the revenue. They own a bunch of random businesses like Duracell Battery. They own Dairy Queen. They fully own Dairy Queen. Look, they're in manufacturing, McLean. They own railroads, BNSFW Railroad. So this is just such a great company. And they don't pay dividends, but they return all the money through buybacks and buying new companies. So they're cool. It's like a S&P 500 competitor. What's your number one holding right now? Someone asked me. So yeah, hey, first off, let's see how the market's doing. The market did just open 13 minutes ago, and we're down 0.23%. What's the S&P 500 doing? So yeah, Tesla's up 0.79. Nvidia's almost green. Qs are down 3. Okay. Anyway, my largest holding, yeah, if we go to total equity, my largest holding in here is Carlyle Group. And then in this portfolio, it'd be FIX. My largest stock of all time is ticker symbol FIX right here, Comfort Systems. They're an HVAC ventilation play. They've seen so much growth because a bunch of Bitcoin mining companies and data centers have to use Comfort Systems to service the heat and stuff. It's way better, way more better than like water cooling. Anyway, let's see. They service over 12,000 buildings. HVAC, plumbing. Hey, Tantalk said, I appreciate you so much. Yo, I'm going to give you a follow, bro. Thanks for being so nice. All right, let's keep looking here. EPD, is the market open right now? Yeah, the market is open on the overnight market. So if we actually, let's see how the Webull portfolio is doing. What is anything up in here right now? So Progressive is up. That's my most recent purchase, Progressive. Robinhood's up 0.7. SoFi's up 0.7. What's down though? Yeah, UiPath, AMD's down a little bit. So yeah, the market did just open. So here's EPD right here. This is a dividend play. We'll look at SEHB. Tom Lee is the chairman of BitMine. What's BitMine? So here's EPD right here. This is a dividend play. There is a big warning on this stock. They give you a K1 tax form. And when I first started investing, I accidentally bought a stock just like this, and it gave me a K1 tax form. And it cost me $200 with an accountant to get it filled out. So you don't want to buy this stock unless you know that they give you a K1 tax form at the end of the year. And because they're an MLP, a master limited partnership, you're technically not a shareholder, you're technically a partner with their units, and you get a 6.6% dividend yield. And that yield is actually sustainable. They own a bunch of natural gas pipelines and stuff, I believe. So what's the Comfort Solutions ticker symbol? Yeah, ticker symbol FIX right here. Comfort Systems. The valuation is a bit high right now, but everything about this company checks the box for me. I'll be really quick about this. Like if we look at the revenue right here, revenue's up 19% year over year. So 19% revenue growth, but the net income is up 75% from the previous year. So this means they're growing their margins like crazy. They grew their margin 50% year over year. They're also kind of unique. They actually raised their dividend quarterly. In the most recent quarter, the dividend was 45 cents, then 40, 35, 30. So they're raising their dividend quarterly, which is crazy. Very shareholder-friendly company. They just upped the buybacks. So let's see. What up, Frank? How does gold compare to Bitcoin, folks? Yeah, dude, Bitcoin has been crushing it, all-time highs right now. So ticker symbol DRS. What's this company? I have some cash I want to invest, but I don't know with the tariffs. Yeah, it's kind of tough buying stuff at all-time highs right now. But here's some companies. I actually just made a video about this. If you want to check it out, I really appreciate that on YouTube. Nathan Robert. But there are some stocks that are not at all-time highs, and these are the ones I just bought. Ticker symbol PGR, Progressive. The fundamentals here are incredible, and I think this one is at a really good valuation, even buy right now. And I go over two other stocks that I think are at good valuation. But anyway, here's DRS right here. I've never heard of this company, but wow, congrats if you own them. They're at an all-time high right now. What's the dividend? So very small yield on the company. That's all right. So they do advanced sensing and computing. And look, the business is growing. It's up double digits year over year. Integrated mission systems. So hey, they're an aerospace or a defense play, actually. That's interesting. Net income. Yeah, whoa, they must be growing the margins like crazy. Yeah, revenue's up 16, but this net income's up 72. Man, they're growing their margins. Great news for DRS. So I can totally understand why this one's at all-time highs right now. What do you think of Google? Yo, what up, Rick? Yeah, dude, I love Google. I do own this one. So first off, I might be a little biased. I own this one in my Robinhood portfolio. I'll show you it after this. What website are you using? Yeah, this is a brokerage right here if you want to get it. Linktree in bio, very first link there. And we'll look at, I want to get to all the stocks here. I do apologize. We'll get to XERS, Nexstar, and SoFi as well. I want to go over SoFi again. So anyway, here's Google right here. This is like a perfect buy and hold forever company. Don't sell out of this one. Just hold it. And in my opinion, the valuation's really low. They're the cheapest Mag 7 stock. They're literally trading at 20 PE, which means they're trading at 20 times net income. The PE ratio is just the net income multiple plus any buybacks or dilution. And the margin expansion is incredible on Google. So revenue's up 12%, but net income's up 45. I mean, that's incredible. 35 billion of net income just in the most recent quarter. Google has $80 billion of net cash as well, and they're shareholder friendly now. They're paying you a 0.5% dividend. They literally spend $15 billion every quarter buying back their own stock. So this one, I believe, is going to win. They should benefit from AI. They own YouTube. They own Google Search. They own Android, the whole Android, the Google Play Store. They get the App Store transaction fees from that. You know, they even make a Google phone. They own Waymo. They're going to be the quantum chip leader. So anyway, I really like Google. Let's see here. Thoughts on investing during all-time high? Yeah, it's tough. So, hey, that's why I got some cash built up right now. But I have been buying some stocks that aren't at all-time highs, like Progressive Corp. I literally just bought this one a couple days ago, and I am down on them. Look, they continue to go lower. But yeah, buying just the S&P 500 is tough. What is? Are you able to look at any key TAR? So Nectar Therapeutics. Let's check them out. So this isn't one I'd like to cover. $400 million company. So very small market cap on this one. And hey, Chi said, what app is this? It's a brokerage, Linktree and bio, very first link there. But so $500 million company, and they did just gap up like crazy. So maybe they got FDA approval to finally sell something. Let's see, what are the sales here? So, well, if we go to the net income, they lost $50 million in the most recent quarter. And look at the revenue. It fell 51%. Did they like sell off an asset? They have been. They're selling a lot of assets, huh? You know, I just, that one looks really risky. I'd be careful with that one. So here's Amazon right here. Yo, yeah, so Amazon is such an innovative company as well. A lot of people know Amazon just for their like online website, but they're actually the #1 cloud service provider, and it brings the most bottom line to Amazon. Did you know the most valuable part of Amazon that brings the most net income to them is actually the AWS, Amazon Web Services? It's literally now for the full year 2024, it's over $107 billion of annual revenue, and it just keeps on hitting a new record every year. So Amazon's the #1 market share cloud provider in the world, and that's something that not a lot of people talk about. They're also an advertising play. They own Twitch, but look at this net income right here. It's ridiculous. They're making crazy net income. The revenue is up 8%. Look at this crazy revenue. Amazon does 180 billion of revenue. It's hard to grow those numbers, but revenue is up 8%, but net income's up 64. This is another margin expansion play. Like 11% net margin in the most recent quarter. You know, if we zoom out, you know, this used to be a single digit margin business. So Amazon's just growing the fundamentals. So, all right, let's see here. Someone said, is XRP a good buy? Hey, XRP, that's not really a stock. We don't really look at crypto because there's just not much for us to look at on XRP. Yeah, I don't think we can view XRP on this. We can on Robinhood, though. But yeah, XRP, you know, it's like a unique feature, like same with Bitcoin. There's no like earnings report like Bitcoin. They can't miss on net income or anything. It's kind of a unique feature. So, okay, let's see. XERS. Oh, and we'll look at Chewy. Another pharmaceuticals one. So yeah, not one I really want to give too much attention to. $800 million company, stocks at all-time lows. I mean, it has been doing pretty good the past year, so congrats if you own them the past year. But they own, these are their prescriptions or whatever, Recolev, Gvoke. So royalty contract, hey, they're getting some royalties. So are they making net income? They're getting closer, so they're losing like 10, 50 million a quarter. Not actually too bad. The revenue has seen some very nice growth. They are a bit leveraged, more liabilities than assets. It's actually not too terrible. Actually, XERS is not as bad as I thought it would be. They're trending closer to net income. The sales are up like 50%. Let's see. Yeah, sales are up 47%. It's actually not too bad. I don't like the amount of debt they have. Like 1/4 of the, like 33% of the market cap is debt. So let's see here. PFV announces a 43-cent dividend raise. We'll look at SoFi and LYV. Jeff Mack, good to see you, dude. Happy Sunday, everyone. So here's Pfizer stock. This one is just a dividend play at this point because if we look at the yield here, you get a 6.6% dividend yield. And the management basically came out and said they're committed to keeping the dividends safe. They own like a bunch of pharmaceutical stuff, like they own like Viagra, for example. But look at this. They're finally starting to bring back their net income. It was really bad for them when they were losing net income right here. They were losing $2-3 billion. But now it's a bit more consistent. And as long as they can keep up this net income right here, I think that the dividend is for sure going to be safe. So Pfizer's an interesting one. But again, it hasn't been too well of a performer ever since COVID because of the vaccines revenue's gone. But I think the dividend's safe there. So let's look at SoFi right here. Yeah. So that's funny, Jeff Mack. The stock market's on fire. So here's SoFi Technologies. This is one I believe that deserves to be at a 52-week high right now. So, hey, thanks User47 for the follow. Yeah, I try and get to everyone's stock in the comments. I do apologize if I don't get to all of them. Like I want to look at Nuev and AMC and MATX. I want to get to all these if I can. So here's SoFi Technologies right here. This is one I do own, so I might be a little biased first of all, but I own them for a reason because this is the kind of stock you want to buy and hold for the long run. Like, look at the growth. They're a fintech. They have their own banking charter and everything. The financial services revenue is literally doubled. It's up 101% from the previous year. So incredible growth on SoFi's, revenue, and they're making net income. They're making net income every quarter. People didn't take them serious because they used to lose net income every quarter. So the growth is just really good there. So LYV stock. Oh, this is Live Nation Entertainment, LYV. So they're on my watch list, actually. I think they own ticket.com. So, hey, look at this. This is not too good, I guess. This app is telling me that there's a bearish flag technical analysis. So that's cool, I guess. But let's see. So, yeah, concerts, ticketing, like the Taylor Swift concert was through them. Let's see. Yeah, whoa, they made $500 million that one quarter. So it's a bit cyclical, but still, if you average out the 4 quarters, they're making hundreds of millions of net income every quarter. That's really good. Cash from operations, wow, $1.3 billion. That's incredible. Liberty Media Corp owns most shares. Hey, they're such a niche company. There's no real competition in the ticket space. So they're like, I've heard about them before. I think they have like a monopoly on the industry. So let's see. User said, "Oh yeah, what up, big mans?" He said, "Bolts here," or Hood with the laser. Hey, what up, dude? So ANSS stock, someone said, we'll check it out unless it's a small one. So hey, no, they're really big actually. So $33 billion market cap. The stock's actually done pretty good. Look at that gap up. They've done really good since April, kind of like all stocks. But let's see, do they pay a yield? No dividend on this company. That's all right. PE is a 55, but this company always trades really expensive, so they must have high growth. Let's go find out. So revenue is up 8% year over year. All right. But they're making net income every quarter. So this is really good news that they're making a couple $100 million a quarter. And it's really improved since the previous year is what it looks like. So they're making a couple $100 million a quarter. They have pretty much no debt on this company. So really good balance sheet. Cash from operations, well, that's the big winner, up 41% year over year. So cash flows have exploded. They're all right. They're pretty decent. I think it's not crazy growth, like 8% year over year growth. I think that's why the stock is kind of flat since 2021, just because of the insane growth. But they've been a great performer the past couple of weeks here. So let's see. Snowflake stock. Hey, so yeah, Snowflake, this is Palantir's competitor. They do exactly what Palantir does. But there's some good news and bad news about this company. And I just like showing you the numbers for yourself. You can draw your own conclusion. Here's the not so good news. Or here's the not good news. They're losing a boatload of money, and the trend isn't really getting better. They're losing more and more money. They lost $400 million the most recent quarter, 35% more losses in the previous year. And look at the product revenue. This is the great news. This is the good news. This is why everyone, this is the great news about Snowflake. Look at the annual growth of the sales. I mean, literally in 2020, sales were $250 million. Now it's $3.5 billion. I mean, just in the most recent quarter, it was $1 billion, up 26%. So they have $1 billion of revenue a quarter nearly. So the revenue growth is insane, but we really want to see them start to fix the net income losses. Sim said, what app is this, please? Yeah, hey, this is actually a brokerage right here. If you want to download it, it's in the link tree in my bio, the very first link there. So yeah. All right, let's see here. So, big man, yeah, we'll look at Intel. So Intel, this is like the U.S. chip manufacturing player. You're really hoping like America gives them some stimulus, but like NVIDIA has kind of been the winner here. Because if we go to Intel, the stock is the same price that it was back in 1998. So if you bought this stock in 1998, you're actually down on your position. And it's unfortunate because this is what most people see. Intel has a 63% PC GPU market share. It's down 3% year over year, but incredible market share. But I just can't touch this one because of the crazy losses this company has. Like, look at the free cash flow. They're literally losing $4 billion of free cash flow a quarter. The net income's not much better. Look at that one quarter. How's that possible to lose $17 billion in net income? I mean, it's rough. So the bad fundamentals and the huge losses kind of explain why Intel hasn't been doing so good. And I think did they pay a dividend? Yeah, look, they can't even afford the dividend right now because they cannot afford the dividend right now. So it's tough. So let's see, ASTS or let's see, STRS. What's STRS? So Stratus Properties. So this must be a real estate investment trust. Very small name, $150 million company. no dividend either. Leasing operations, real estate. So they must do like triple net leases. I don't think they're a REIT though. Yeah, not much revenue on this company. I'd be really careful. They're doing 8-10 mil of revenue a quarter. They're losing a couple mil. So it's tough. Yeah, thinking about investing. Yeah, I don't think I can find this stock, but you know what? I'll try and find it. This is a weird ticker symbol. Usually if it has a weird ticker symbol, you don't want to own it. ALDRV .pa. Yeah, I don't think I can. This must be in some weird country. Unfortunately, I can't view that stock. I think we can only view US, EU, Canada stocks. So yeah, sorry about that. ASML, yeah, ASML. Oh, and Kroger, MicroStrategy. I want to look at all these stocks. Remind me to. And Broadcom and SoundHound AI. These are all great. So here's ASML right here. This is the chip making manufacturer. They have 3 main customers. It's like Intel, Samsung, and I think NVIDIA. So they have a bit of a customer concentration risk, but they're printing money. The fundamentals are at a record right now. They're printing money. $2.5 billion of net income in the most recent quarter, up 93% year over year. And the revenue is only up 47% year over year. So that means they're growing their margins. Yeah, they grew their net margin 31% year over year. They also have a nice little dividend. They're returning money to shareholders, get a small near 1% dividend. So yeah. What's weird is like the business, the fundamentals are at the all-time high, all-time best, but the stock isn't. So you wonder what's happening over there. Hey, Cloudman, how's it going, brother? You said Google. So yeah, let's look at Google. So, and then we'll look at Broadcom, SoundHound. I want to get to these. Remind me. So Alphabet right here. I do own this one. Also, how's the market doing real quick? Google is down. I got 19 shares of them. Dang, Google's down 0.42% right now, but that's all right. This is one that you should just buy and hold for the long run. Don't really trade this one. Valuation's dog cheap. A 20 PE. Google trades at 20 times net income. They own so many businesses. They're in quantum. They own the Google Search, the Google Cloud businesses. You look at just the Google Cloud business. It's at a new record. They're in cybersecurity with the Wiz acquisition. They own Waymo, Android, YouTube. I just love all of Google's assets. It's kind of like an ETF in one. And the net income grew 45% year over year when the revenue is only up 12. So another company growing their margins like crazy. They also have a 0.5% dividend. So Google's one to just hold forever. So, oh yeah, Broadcom right here. So AVGO, this one's been doing great. Look at that, all-time high, kind of like NVIDIA. NVIDIA's at an all-time high as well. So huge company, $1.3 trillion company. This company is bigger than Tesla. Broadcom is bigger than Tesla. They might, I don't think they'll replace them in the Mag 7. But anyway, look at this right here. A lot of people know Broadcom for their semiconductor solutions. That's half the revenue. But then they have this high-margin software. Look at this infrastructure software that get the people that used to code the margins, the royalties and stuff. Look at the growth here. Literally, it was 1.9 billion. Now it's 6.7 billion. I mean, incredible growth of the infrastructure software. And so that's why the stock's been doing so good. We go to the FCF, which is free cash flow, at a record, up 44% year over year. Literally 6.4 billion of free cash flow. So Broadcom's crushing it, and they have a nice dividend. So really nice dividend there. So, oh, hey, Luke, we'll look at RYCEY, right? So Rolls-Royce stock, let's check it out. So yeah, Rolls-Royce, a lot of people know Rolls-Royce just for the cars, but this is actually an aerospace and defense company. They make a lot of plane engines. Wow, look at that huge recovery. It looks like they were priced for bankruptcy down there. But Rolls-Royce has had an incredible recovery. Let's go check out the financials here. So yeah, look at that. Half the revenue comes from the aerospace products. Then 23% comes from defense, power systems. Let's see, net income. Yeah, dude, for the full year 2024, they made $3.1 billion of net income. I mean, really, really good stuff there. And $3.6 billion of free cash flow. So the fundamentals are really growing there. Hey, Luke, I really appreciate you, man. Yeah, if y'all wanted the like button, I'd really appreciate that. If you wanted the follow button too, we go live every day. We just look at stocks and stuff. And by the way, I'm not an expert. I'm a college student, so I don't sell nothing. I don't have a course, a book. I don't got nothing. So just on here giving my opinion. Thank you all. So let's look at Netflix right here. So this right, and actually the only thing I do ask, if you want to really help me out, go subscribe to my YouTube channel and watch the stream from there. If you miss anything, you can watch it on the replay. But YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm streaming on there as well. I make videos. So anyway, here's Netflix stock. Netflix, incredible company. They really deserve this stock price appreciation because if we look at their premium subscribers, I love this data we get here. Look at this. The premium subscribers last year were 260 million. Now it's 301 million. They have 40 million new subscribers than the previous year. Incredible. And if we go to the net income right here, they're printing money. They're making over 2 billion in net income a quarter. The free cash flow is even better, well over 2 billion of free cash flow a quarter as well. So Netflix, the valuation's high, I will say. So it's tough buying them, but great growing fundamentals there. Oh yeah, SoundHound AI. So this is a risky one. They're losing a lot of money, but there's one thing you want to pay attention to on SoundHound AI, and that's the subscription revenue right here. So check this out right here. 85% of the revenue comes from their subscription revenue, and look at the growth here. A year ago, it was 600,000. Now in the most recent quarter, it's 25 million. It's up 585% year over year at this incredible growth rate. What's it going to be this time next year? So it's just a really growthy company. They also have these product royalties. The royalties are kind of in the toilet right now, down by half year over year. And they are losing net income every quarter, but they have really high growth. And they've really been fortifying their balance sheet by issuing shares recently. So you're really watching the subscription revenue now. Rolls-Royce is awesome. They had a jaw-dropping, amazing car in Tokyo, Japan showcase. Really? That's, yeah. Rolls-Royce, they got cool cars, and they're in the aerospace and defense industry, which is really popular right now with all the war fears and stuff like that. So let's see here. Robinhood stock. We'll look at MicroStrategy. So, hey, I'm a Robinhood user, and I have a Roth IRA with Robinhood. How's the Roth doing real quick? Hey, we started this one exactly a year ago. We're up 14% all time in here. How much are we up in here year to date? We're up 8% year to date, 13% of the year. So anyway, let's see. Robinhood. I own that stock, by the way, in my risk-on portfolio. Let's see. Are they up in the overnight market? I assume so because of Bitcoin. Yeah, Robinhood is up 0.42%. Whoa, SoFi's up 2% right now. Dude, SoFi just keeps on winning. Winners win, man. And anyway, Robinhood, the valuation's high right now, but Robinhood is such an innovative company. And here's the real reason the stock has done so good. They've really just blown away every expectation. I mean, they're making hundreds of millions in net income a quarter. Hundreds of millions, incredible. When if we zoom out, they used to lose hundreds of millions a quarter. They even were almost had a chance at bankruptcy because they were losing so much money at the time. They were losing literally like 30% of the market cap and net income a year. It was tough, but that's why the stock sold off so aggressively and now has run up so aggressively because it was just so oversold. Anyway, someone said, can we check out MicroStrategy? Hey, that's like a Bitcoin proxy. You know what? We'll check it out. So where's Bitcoin stocks? I have a watch list. Or crypto stocks. Okay. So yeah, they own a ridiculous amount of Bitcoin. Yeah, I love Circle as well. Oh, and eToro. Someone was saying eToro earlier. Let me know if you want me to look at that one again. Or look at them at all. So here's MicroStrategy. I assume this one's going to go up like crazy tomorrow because Bitcoin's at 120,000. So, and this company literally owns so much Bitcoin. Let me go to the balance sheet right here. If we go to the assets on the balance sheet, what is this 43 billion of assets? That's the Bitcoin that they own. And they literally diluted the shareholder by $20 billion to buy a boatload of Bitcoin. And it was genius. The stocks love it. The stock loves it. So this is a Bitcoin proxy. And it's actually is like almost like leveraged Bitcoin. Whenever Bitcoin goes up 1%, it usually goes up like more than 1%. So, all right, ARLP. Hey, Callie, how's it going? So what's this one? ARLP stock. This one's on my watch list, actually, and I don't remember why. So let's go check them out. There was something I liked here. So this is obviously an oil and gas company. Let's see. So Illinois Basin coal operations. So actually not really. Their main segment of revenue is their coal operations, but look at in Appalachia coal operations, but also I think this is why I like them. This was a royalty stock. Look at this. They get oil and gas royalties and coal royalties. How's the oil and gas royalties doing? Yeah, it's 36 million a quarter. Not bad. Do they pay a dividend? Whoa. Hey, you get a 10% dividend with this company. That's incredible. So this is, oil and gas play. The net income is kind of fallen a little bit, but that's probably because of oil prices. Anyway, they're interesting. And Trump's been very bullish on coal for some reason. Yo, Sermon, how's it going, dude? Sermon. Yo, Eric said Robinhood banned trading on GameStop. Yo, Eric, it was actually Citadel. I've read the story. It's still a terrible look for Robinhood. But yeah, Robinhood removed the buy button on GameStop basically because of Citadel. Anyway, what app is it? Hey, yo, Bernardo, if you want to get this app I'm on, it's actually a brokerage. It's in the link tree in my bio. Very first link there if you want to get it. So BBAI. So this isn't a company. I don't really know anything about this stock. And I can't really give you too much thoughts on this, so I do apologize. But they have been performing pretty well. They are down 9% the most recent day. They're a 1.8. This is the one thing that I don't like about the company. So the whole company is worth 1.8 billion. Remember that the whole company is worth 1.8 billion, and they've lost well over 200 million of net income the past year. So they've lost over 10% of the market cap in net income. They can't really keep that trend up. So I would like to see that get a little better. But this is another company, since they're so much momentum right now, they are diluting you and fortifying their balance sheet. Their liabilities just went down a bunch and their assets went up. So probably there's no bankruptcy risk here. I think they're doing like 40 mil of revenue a quarter. So check eToro. You know what? We'll look at eToro. They were on the crypto stock watch list. So let me go back to over here. So then we'll look at some of these. Oh, Coinbase. Yo, I want to look at Coinbase too. And yo, Adrian, how's it going, brother? So yeah, on this watch list right here, where was it? Crypto stocks. Okay. So obviously MicroStrategy, then Circle. Dude, has anyone heard of Circle before? This is like they own USDC, the crypto, the USDC, they issue it and everything. So anyway, here's eToro Group. I don't know anything about this company actually. They IPO'd literally a couple months ago. So this is related to crypto. I'm not too sure how though, which is unfortunate because so trading activity, maybe they own like a platform or something like that. So actually do beware, 100% of the revenue comes from Israel. So not from the US. So they might inherently just trade at a low PE ratio. They are making net income from the few bits of data that we have here since they just IPO'd. They made 60 million of net income. So, and the balance sheet keeps on growing. Yo, Cool Hand Luke, what's up, brother? How are you tonight? Happy Sunday, everyone. What does that trade under that you just talk about? Yo, Michael, wait, I'm not too sure what I was talking about there. Or I forget, I don't know. Or re-ask the question. I don't know what you're talking about there. I want to help you out though. Do you get a notification when Nancy Pelosi buys a stock? It just updates on here daily. So yeah, these super investors right here, Warren Buffett, Nancy Pelosi, since they're super investors and they have a net worth of over 100. And so this app right here, we can literally see that each individual trade, she was in and out of Roblox and all these stocks. And we can see her holdings, like 25% of her portfolio is in Apple, then Amazon, Google, Salesforce, Netflix, CrowdStrike. So yeah, you can see like super investors' portfolios. Like Warren Buffett, he just bought some really weird companies. Like he bought DaVita, Chubb, it's an insurance company, Kraft Heinz. Well, he's owned that one. What is Copart? Hey, give me a ticker symbol. Yeah, how are you, Gardy? Give me the ticker symbol for that company. I'll check it out for you. So user 24 said IREN. Hey, this is a stock I have on my watch list and one I'm really considering. And again, not financial advice. I consider putting this one on your watch list right here. So what's the name of this app tracker? Hey, Evans, this is actually a brokerage right here. If you want to get it, it's in the link tree in my bio, first link there. It's called Moomoo. But here's IREN. This is what I love about this company. Just the growth of it. If we go to the revenue right here, the revenue is up 166% from the previous year. That is incredible growth. And they have this monster balance sheet right here. So incredible revenue growth. And they're making net income in the two most recent quarters, 24 mil the most recent quarter, 20 mil before. So IREN is one, I can see why this one has done so good. So let's see. PSIX update. Hey, what up, Butter? So yeah, PSIX, this is one of my most recent purchases right here. Ticker symbol PSIX Power Solutions. And I made a video about why. So I bought this stock at an all-time high right here, but this is the kind of company that I believe is just going to continue to hit new and new all-time highs. But you don't want to have this as a huge position, put like buy a share or a couple shares and then only buy more if it falls over 10%. Like don't buy any more unless it falls 10%. But anyway, here's this why I love this company is the bottom line. This is a $1.6 billion company and they're making 20 mil of net income a quarter. The growth rate's insane. So, and they have no net debt. So I made a whole YouTube video about PSIX. If you want to check it out, I'd appreciate that. It's my second most recent YouTube video. On my YouTube channel is called Nathan Robert, Linktree in bio. So CPRT equals Copart. I can't find that one. Maybe you're talking about this ETF right here. First Trust Crypto Industry ETF, huh? How much do you have invested above? Yeah, right around 60K. Yeah, hey, thanks, Jeff Meg. Yeah, so I have 3 different portfolios right here, all with different goals. Like this one right here is my buy and hold portfolio. Once I buy a stock in here, I'll never sell it, or I try not to ever sell it. This one right here is my growthy portfolio. I try and buy risk on stocks. We have not outperformed the market. We're only up 9% all time in here. We've had some losers, and we also have our dividend growth portfolio. So every stock in this account pays a dividend, and they're all also in the S&P 500. So, yep, those are the portfolios. So let's keep going here. So Jeremy said HOLO. We'll check this one out. So if I think it's a micro cap, yeah. So this isn't a kind of company I really want to talk about on here. So look at this stock right here. They're at a look at the amount of reverse splits that they did. This used to be a $280,000 stock because of that. But anyway, this stock's at an all-time low. They're only worth $35 million. So think about that. This whole company is worth $35 million, and they lost. Oh, dude. Yeah. What's the revenue? Revenue $7 million, down 50% year over year. They have a really good balance sheet though. That's actually really interesting. Is that cash? 200 mil of cash, dude. Hold on. So they have 200 million of cash. And the whole company's worth 35 mil. So they have a bunch of cash and no debt. So this is like a cash play, but I'd still be really careful. Very small market cap. Let's see. You beat me by 10K. We were the same amount for a while. Hey, no, what's up, Sermon? I appreciate you, man. I remember you've been in here for a long time. Thanks for all the support. So ticker symbol O. Hey, so that's Realty Income. That's actually a REIT. This is one of the few monthly paying dividend stocks. So if you're like a dividend investor, want some income, this is Realty Income. They're actually known as the monthly paying dividend stock. They have that trademarked for some reason, but this company pays you monthly 26 cents every month. So you get paid just over a quarter every month. The yield is a 5.65%. So a 5.65% dividend that pays you monthly. This is a REIT right here, a real estate investment trust. They just do triple net leases. This is down from 2019. So if you buy the stock, you don't really want to expect to outperform the S&P. But what you do get is a nice sustainable, the dividend is sustainable, very sustainable, 5.6% dividend yield. And you get the monthly payments. So I love that one. I actually own one of their kind of competitors, not really competitor, but this one is another triple net lease REIT, really high dividend yield, but this is a grocery-centered focused REIT. So their main customers is Publix, Kroger, TJX. So, all right. Let's see here. Yo, Adrian, how's it going, dude? Good to see you. He said qubits. So yeah, this is on the quantum watch list. So actually, let me go to the quantum watch list real quick. Quantum has been a crazy momentum sector recently. So yeah, quantum computing. In my opinion, the main winners for quantum are going to be a Google or an IBM, or maybe even Oracle. These have the money and the talent to be the industry leaders for quantum. But then you get some of the microcap ones like Riggedy, Qubits, QUBT. These are smaller, but there's more momentum in this name. Like look at this crazy stock price appreciation that quantum names have had recently. So D-Wave Quantum, nice. They did also just beat on revenue by a good amount. They were expecting 10 million of revenue. They reported 15 million of revenue, so that's really good. But yeah, it's tough. It's a $5 billion company. I don't know if I'd pay $5 billion market cap for that, but it's really just a momentum play right now. You don't really look at the financials right there. So let's see what. Yeah, hey Dominic. Yeah, it's a brokerage. If you want to get it, Linktree and bio. Yo, Butter Dave. I answered you on the first PSIX update. If you want to. I don't want to go over them again because we just went over them. But if you want to see, if you missed anything on the stream, go to my YouTube channel. My YouTube channel is called Nathan Robert. I'm also streaming on there. You know, if you missed anything, you can replay it, rewind. So yeah, and also it would mean the world to me if you just subscribe to my YouTube channel. I sell nothing. I have no course, no book. I literally just on here give my opinion. The only thing I would appreciate if you subscribe to my YouTube channel called Nathan Robert, link tree in bio. Anyway, here's Taiwan Semi. Taiwan Semi is an absolute winner, and I believe this one deserves to be at an all-time high right now. They have the #1 market share for those 5-nanometer wafer chips, and this is kind of like you get exposure to NVIDIA, you get exposure to chips, and you get a dividend. Look at this. This company has an over 1% dividend, even though the stock's at all-time high. As you know, when the stock price goes up, yield goes down, but they still have a 1% yield. And look at the PE. Like, this isn't exactly expensive. A 27 PE, really good. And look at this market share for the wafer chips. I mean, literally a 67% market share. It keeps on growing. The market share is growing. And look at this. Even though this is Taiwan Semi, this net income is in USD, US dollars. They literally make 10 billion of after-tax net income a quarter. I mean, isn't that incredible? 10 billion the most recent quarter, 11 billion the quarter before. And yo, KC, homie, thank you so much, KC. I really appreciate the rose there. Good to see you again. If you got a stock you want me to look at, let me know, KC. So I love the net income right here. This is one I almost like them. It's like I always wish I bought Taiwan Semi over AMD. I do own AMD, and AMD doesn't pay a yield or anything, and Taiwan Semi does, and they perform better. Like Taiwan Semi is at all-time highs. Look at AMD. They're kind of nowhere near all-time highs still. They got another 40% to go. So let's look at HIMS. Yeah, hey, what up, Vital? He said HIMS stock. Let's check it out. And CRDO, I want to check out all these. Do you think the stock market's going to be okay? Well, let me real quickly check the S&P. I think the S&P's down in the overnight market. Not much. Yeah, look at that. S&P's down 0.4. Wow, look at NVIDIA and Tesla. Tesla's up 1. NVIDIA's up 0.5%. That's another new all-time high on NVIDIA. Wow, 165. So anyway, let's go look at HIMS right here. This is HIMS and HERS. This is the healthcare kind of play. So the reason the stock fell right here, they used to sell a weight loss prescription. It's been a huge winner and revenue driver for them. They would sell a weight loss, kind of like an Ozempic, and then they can't sell it anymore. They lost their partnership with NVO, Novo Nordisk, which owns Ozempic, so they kind of dropped them as a partner, and that's why the stock fell so much. So just know that the future is a bit uncertain, but for right now, man, the fundamentals are incredible on HIMS. Look at this revenue right here. It's more than doubled. The revenue is up 110% from the previous year. That is incredible revenue growth on HIMS. And also the free cash flow, that's what FCF stands for. They're making 50 million plus a free cash flow a quarter. The net income is crazy right here, 70 million of net income a quarter, and just keeps on growing. And this company has no debt at all. This is a debt-free company, and they have cash. The cash is earning interest. So HIMS and HERS keeps adding new products, testosterone therapy. Oh, that's really cool, actually. So yeah, they're trying to innovate a way. So yeah, they're going to lose some revenue from the weight loss stuff, but they have a bunch of other, products that I can't really say. But you're right, man. So let's see. I love the growth there. Daniel said IXHL. Let's check it out. So, this is one I wouldn't really want to cover. So a $20 million company. So extremely small market cap, pretty much $20 million company, and the stock's at an all-time low. So yeah, I don't really want to give much attention. Yeah, they lose 4 or 5 mil a quarter. Do they have any revenue even? So I think the revenue is 12,000. I'm sure someone in here is making more money than this company. So I don't know. That one's super risky, man. Hey, Price, he said, just found out HIMS has a leverage ETF. Oh, does it? It's like HIMX or something. So let's see. VRT, hey, is that Vistra? Or no, this is Vertiv. So Vertiv Holdings. So I think they do like server cooling, server racks, stuff like that. Let's see. So they sell products. Yes, look at that. 79% of the revenue comes from their products. And look at that. This is really good growth. The revenue is up 30% from the previous year. What about the services? Services revenue is up 5%. Not bad. They make a net income. Yeah, look at that. Over 200 million of net income a quarter. Really good. So, yeah. All right, let's see here. So yeah, VRT, I think they pay a dividend too. Yeah, 0.10% yield, very low payout ratio, 8% payout ratio. So I like this one for the growth and the net income growth there. So, why do you make Robinhood account? Yeah, I love Robinhood. They're a responsible, publicly traded stock. HPE's new acquisition will be huge. HPE. Let's go check them out. Oh, we'll look at DK and G. Oh, and Oscar. Yo, remind me to look at Oscar next. I want to look at Oscar. They're the Medicare Medicaid play. Oh, and ticker symbol T. We'll look at AT&T too. So here's Hewlett Packard Enterprise. So someone in the chat said they did an acquisition. So I don't know what the acquisition is, but what that means is the growth is going to be really high in the future. And hey, look at the industries that this company is. That's really niche, actually. They're, well, not too niche, but they're in server, hybrid cloud. How's the hybrid cloud? Hey, it's up double digits, up 13% year over year. Intelligent Edge, how's that doing? Up 7%. Financial services, hey, a little fintech in there. So I like how diversified the revenue streams are. Look at that. Only 36% of the revenue comes from the U.S. That's interesting. And they lost $1 billion of net income. Was it the acquisition? No, well, they did invest $1 billion. So I don't know. We got to wait for that acquisition. You're right. I have a robotic voice when speaking. Oh, that's funny. Yeah, I'm not AI though. Don't worry. Hey Casey, thanks again for the rose, dude. He said, "Would you rather buy Coke or Pepsi?" Remind me to look at them. I would at this price right now, probably Pepsi. They're more diversified than Coca Cola, like they own the Frito Lay business, but they've been struggling recently. They just lost Costco. Y'all know Costco. This isn't a big. This doesn't affect Pepsi at all, but Costco just dropped Pepsi. Like if you go into the food court, you get the hot dog, $1.50 hot dog, and a Pepsi. Well, now they only serve Coca-Cola products. Literally a month ago, they dropped Pepsi and went for Coca-Cola. Anyway, random story there. Let's go back to AT&T real quick. This one has been surprisingly been performing very good ever since the Warner Bros. Discovery spinoff. AT&T's done great because they don't have as many debt interest payments. They also cut the dividend, and investors like that, and I liked it too. They cut their dividend to a 4% yield. I think investors are still happy with a 4% yield. And yeah, look at this net income right here. They had a little one-time adjustment 2 quarters ago, but they're literally making 5 or probably like 4 billion of net income a quarter. Yeah, 4.7 billion the most recent quarter. So I really like this stock. And the PE ratio, it says a 16. It's actually like a 12. They're actually trading at like 12 times net income. So that's good. HPE Juniper acquisition. Oh, deal finalized July 2nd after DOJ. Oh, thanks for that, Six Flags. So HPE was acquiring Juniper. That's interesting. So, hey, the homie Cheese said, what up, Cheese? He said DGXX stock. Huh. Haven't heard of this company before. So, DigiPower X. So, $92 million company. Not one I like to see. $92 million company. What do they do? Co-location services. The revenue is actually what's the growth over here? So yeah, not good. So revenue is down 28% from the previous year. They're losing net income. Yeah, this is just $100 million company. Okay, balance sheet. I mean, nothing's really blowing me away here. I just try and stay away from like those micro cap names. Oh, hey, Max, dude, this is a company I love. Dude, there's so many earnings tailwinds for Meta right now. I'm going to zoom through this right here. So, because I have a lot to say about Meta. Dude, if you heard of WhatsApp, Meta owns Instagram, Facebook, and WhatsApp. Meta is finally monetizing WhatsApp. Literally this month, they finally announced they're putting ads on WhatsApp. It's just going to instantly create value for the company, instantly create more net income. We can see their active users. Meta has 3.4 billion daily active users. And this is crazy. They just made this app called Threads. It's like a competitor to X, Twitter, and now has the same amount of daily active users as X. It's crazy. It's because if you don't like Elon or Trump, all the Democrats, they all go to Threads because they don't like Elon anyway, it's good for Threads that people don't like Elon. Anyway, what app is this? Hey, yeah, if you go to Linktree in bio, Albi, this is a brokerage. If you want to get this brokerage, it's in the Linktree in my bio, very first link there. Free app. Anyway, look at this net income. The best part about Meta is really the margin expansion. They also just bought 3% of Ray-Bans. Ray-Bans is a publicly traded stock. They bought 3% of them. I'll show you that after this, but the revenue is up 16% year over year, but the net income's up 35% year over year on Meta. They're really a net margin growth story. They have a 40% net margin. This is a $1.9 trillion company with 40% net margins. That's ridiculous. So anyway, yeah, Meta prints money, man, with their Facebook ads, Instagram ads, all that. They're just huge, and that's one you just want. I trust Meta more than Google right now in the long run, and like they just have a safer business model than Google. So I kind of trust Meta more than Google, but I still own both. I own Google, Meta, I got Amazon, I got McDonald's in here. So anyway, yo, Not Fades, how's it going, brother? Happy Sunday. Happy Sunday, everyone. So going to get a tax law with only 36 in the USA. FOX, is this Fox Corporation? Are they public? Hey, I guess they own Fox News and stuff. Oh, I remember Fox sold a bunch of stuff to Disney. Like Fox used to own Family Guy, but now Family Guy is owned by Disney. If anyone's like heard of that, or but anyway, yeah, look at this. Television is most of their revenue. Let's see, it's up 39% year over year. Very nice growth, and actually, cable networking that's up 11% year over year. I don't want to get into politics, but there's been so much ad demand for Fox recently because they kind of know Trump watches Fox every day. I don't want to get into that right now, but there's been so much artificial ad demand at Fox, and it's really helped out the stock. Oh, no way, Dronito, for the 2 roses. Really appreciate you, dude. And Albie Reels, thanks so much for the rose, man. I really appreciate that. Moomoo or Robinhood better? Yeah, I think Moomoo's better in my opinion. There's more analysis tools like on Robinhood. Notice we're not doing any analysis on Robinhood. Like you can't see where the revenue comes from at McDonald's. There's just not much to look at here. In terms, if you're trying to analyze a company, you're not going to use Robinhood. So I personally like this one more. And Robinhood, it costs $5 a month to get the little yield on cash. Well, this app right here, this brokerage, if you look in the middle of my screen, it's where I park my cash. There's no like monthly payment. It's all free. You get the nice cash on. Anyway, my favorite app, Moomoo, Linktree in bio if you want to get it. Let's keep going here. So DOC, and this is DigitalOcean. Hey, I'm surprised anyone knows about this stock. So hey, DigitalOcean right here. This is a cybersecurity stock, and they have like over 100,000 customers that pay over $1 million a year. Actually, wait, that doesn't sound right. Anyway, the net income is really good on this company. Check this out. They're making a lot of net income every quarter. Now, the net income has really grown 170% year over year. They are such a shareholder-friendly company. They're returning like all the money DigitalOcean makes in the form of buybacks. So they look leveraged, but that's because they're just spending all their money on buybacks. And I love how this net income growth is incredible. They're the most profitable like they've ever been. The net income's up 170% from the previous year. So I love the growth here. And the revenue's up 15%. But they have kind of been a disappointing stock price recently. And I do wonder why, because they beat on revenue, they're beating like crazy on net income and EBITDA. They keep triple beating on earnings, but they're being left in the dust, and I don't know why. So I do got to do more research on them. Hey, Randico said, Duolingo, yo, this is a monster growth company in terms of financials. One of the most impressive stocks I've ever seen, because no other company can grow like this. And they're at a decent valuation. The stock market's at all-time highs, but this one isn't. So here's the thing with Duolingo. They're a huge subscription company. They're that language learning app, if you've ever heard of them before. But 83% of the revenue comes from their subscription revenue. Look at the growth here. Look at the middle there, very like bottom middle. The year-over-year growth rate, it literally grows 40 to 50% every quarter, every year. I mean, it literally just is a new record every quarter. So they're a big subscription play, and that's all reoccurring revenue. And they're also an advertising play. Look at that. Hey, the advertising revenue jumped 38% year over year. So they're a nice ad play. Duolingo English test revenue. Hey, they're making 12 mil a quarter from that. Anyway, they're not just growing on the top line, but the bottom line too. Look at this. The free cash flow is ridiculous. 100 mil of free cash flow the most recent quarter. The net income, 35 million, up 31%. So very profitable company. No debt as well. I didn't show the balance sheet, but they have no debt. They're in my debt-free watch list. If you look right here, this is my zero debt watch list. Just because they have no debt doesn't make them a buy, but it certainly takes some risk off the table. All these stocks here are debt free. You maybe heard of some of these, like a Pinterest, an Opera GX browser, if you were Zoom, Reddit, Yelp. These are all debt free stocks. Oh yeah, I wanted to go back to OSCR. So Oscar Health, and then AMD, PayPal. I want to check out all these stocks. And Roblox, yo, Roblox is cool too. That's a Kathy Wood play. But here's Oscar Health. This is the Medicare, Medicaid stock. The regulation's hurting them right now. That's the only reason they gap down right here. Government isn't too happy with the Medicare, Medicaid providers and the profits they're making. Sorry. Let me get my water here. So Oscar Health, this is the growth of this company has just been insane. I mean, literally, if we go to the annual revenue right here, they are taking so much market share. For 2020, the revenue was 590 million. Not too much revenue, but for the full year 2024, 9.2 billion of revenue. Like the business is literally like more than 10x. So, and just in the most recent quarter, revenue was 3 billion. So incredible numbers here. They are struggling with profitability. They did make 275 million the most recent quarter, up 55%. Great news. So yeah, if you average out the 4 quarters, they are technically net income positive. So anyway, I do like them, but the regulation is hurting them right now. So AMD stock, yeah, we haven't looked at them today, and I love this stock right here. I do own them. I might be biased, and it's tough buying them at all-time highs. But NVIDIA, in the overnight market, they hit a new, probably because of Bitcoin or whatever. Bitcoin, you use GPUs. Yeah, look at NVIDIA up 0.8% right now. So anyway, I do own AMD. Obviously, they're huge in GPUs. Like, look, here's their PC GPU market share, a 17% market share right here. So really good market share there. But they're really a data center play. Check this out. 50% of the revenue comes from data centers, and look at the growth here. I mean, The revenue is up 60% from the previous year. This is very solid, very strong growth on the data center business here. And like the bottom line too, if you go to the free cash flow, up 91% year over year, very strong free cash flows. Net income up 500% to 700 mil. And the balance sheet, man, this is such a monster balance sheet. They have no net debt. So nice. The whole sector of 11 companies of Oscar is too much risk for me. That CNC is down the most. Yeah, CNC, United Health, they've been really struggling. It's like, what domino is going to fall next? What made DOCN fall from 46? How much debt this does? Yeah, hey, I don't know why DigitalOcean, Michael. I got to do more research on them. So let's keep going here. I wanted to look at PayPal as well. And then we'll look at, Roblox, ELAN, UNH. What up? We'll look at, I want to get to all these stocks here. Thank you all for being here, by the way. Happy Sunday. Hope you're having a good day. So here's PayPal right here. This is, your payment fintech company. Here's their total payment volume, 420 billion. This company is mainly just a buyback stock. They literally buy back 5% of all the shares that exist every year. If we look right here, they're making 1 billion in net income a quarter. So incredible net income right there. And you know what? I'll be super, super quick about this. I want to show you the total common shares outstanding. I'll show you. So like I said, they're buying back their own stock like crazy. So here, we just go to the total common shares outstanding right here. Look how fast we did that. So look, total common shares outstanding. In the bottom left, look at the bottom left right here. There's only 979 million shares that exist, down 7% year over year. So literally you own 7% more of the company than you did 1 year ago from PayPal. And look at how the shares outstanding, the trend just goes down, down, down. They're always a shareholder-friendly company. So PayPal, they're just buying back their own stock like crazy. So I do like the valuation on them, but the growth is slowing. I forgot to show that. The revenue was only up 1% year over year, so that is not great growth. Revenue only grew 1% year over year at PayPal, so do beware. Anyway, let's go right here. This is Roblox, man. They've been crushing it recently. Look at that. So Roblox had a new 52-week high. I do believe, what's her name? Kathy Wood owns this stock. So yeah, here's Kathy. Where's Kathy? There's Kathy Wood. So here's her portfolio. ARKK, she owns Coinbase, Tesla, Robinhood. Then her third largest holding is Roblox. And there's some good news and bad news. So here's the good news. Like, look at this is a cool stat we get. Their daily active users are up 15%. It's 97.8 million daily active users. So, and it grew 15%. That's great news. And look at the FCF, which stands for free cash flow. It doubled. It's a 420 million of free cash flow in the most recent quarter, but they are losing 200 million of net income a quarter. How are they making free cash flow and losing net income? That's because of stock-based comp. It's not shown in free cash flow, but it is in GAAP net income. So the reason they're losing 200 million of net income a quarter is because they're paying their employees with stock. And if they had to not pay them with stock and use net income, they'd be losing this. So I don't like the net income losses, and they're a bit leveraged, but they've really blown away expectations. The free cash flow is more than doubled. The daily active users grew 15%. So it's like a mixed bag. There's some really good news and some kind of bad news. What app using? Hey, Pardeep. This is actually a brokerage. If you want to get this brokerage, I'm on right here. Favorite app to do analysis and stuff. It's free. It's in the link tree in my bio. Very first link there to get the brokerage. Anyway, let's keep going here. Let's look at this one. ELAN. I haven't heard of this one before. Elanco Animal Health. Oh, actually, I have heard of this company. This is a Zoetis competitor, and they have like the number 2 market share for like animal health care products. So yeah, look at this, pet health. I think one of the things they sell, like if you ever seen a cow with like a little thing in its ear, that's actually like an anti-flea thing, and it spreads all over their body. So they have like this little thing in their ear that prevents like fleas and stuff biting the animals. Anyway, pet health revenue is down 0.6% year over year. Farm animal down 1%. So that must explain why the stock, if we go on the weekly, hasn't been doing so good. It looks like they're kind of just not growing anymore. Revenue's down 1% year over year. It's kind of the lifeblood of the company, but the net income has actually been improving recently. So you see how I said they made 300 million? That was a one-time adjustment. They're actually they even lost like 40, 50 million a quarter. Yeah, I like the animal health products that they have, but we want to see the growth come back. Where the NASDAQ stands now, the QQQ, or NASDAQ is actually ticker symbol NDAQ. The NASDAQ is publicly traded, but yeah, here's the QQQ right here. The NASDAQ 100 is down 0.43% right now. SoFi's doing good. Hey, SoFi's up 2, Palantir's up 0.7, Nvidia's up 0.65, probably because of Bitcoin. If we go to Bitcoin right here, let's see. Bitcoin, dude, 119,000 makes me wish I owned some Bitcoin right now. They've doubled in a year, up 101% in a year. So yeah, congrats if you own any Bitcoin, by the way. You're for sure up on your money. So, all right, the whole let's see here. Um, Prediction on gold today in TIGR. What's TIGR? So up fintech, they've actually done pretty good, since a year or two ago. Let's see, $1.77 billion market cap. So a small company still, but look, here's this kind of cool. Registered clients, 2.5 million. So that's up like crazy from the previous year, and the paid clients grew. So this is the name of the company is Up Fintech, so I can guess it's some kind of financial management services. And look, wow, 30 million of net income the most recent quarter. What the revenue? Revenue grew 55%, net income. Wait, what? Oh no, I'm reading that wrong. I thought the margins were like a 90%. Okay, I'm slow. So, but anyway, 25% net margin is still very good. I'm actually going to add this one to the watch list. I actually really like them. Ooh, Jesse said FUTU stock. Yeah, dude, this has been one of my better performers recently. If we can find it, yeah, here we go. FUTU stock. So if you're wondering, what is FUTU right here? What is this stock? And hey, they're making so much money right now that they just paid a special dividend. I expect them to continue this. But if you're wondering, what is FUTU stock? What do they do? Well, it's actually this app that I'm on right here. Literally, this app right here is called Moomoo. This is the app publicly traded. So this is this app that I'm on right now. This is their stock, which is pretty cool. And I have them as a brokerage. It's good to know that the stock is doing good because look at this. You can, trust your assets with them. Look at this. They made 275 million of net income in the most recent quarter, up 108%. So they're printing money, over 200 mil of net income a quarter. Revenue's up 82%. Incredible growth. Obviously they're a brokerage, so half the revenue comes from these brokerage commissions. And look, the commissions are up 115% year over year. Incredible growth. And the high interest rate environment, it's great because you can earn a lot of interest income. The interest income's up 53% year over year. So FUTU has been a winner. It's one I really like. So yeah, might be biased because I own them. Yeah, again, none of this is financial advice. I'm not an expert. I'm just on here giving my opinion. I'm just a college student. So hey, if you want to support me though, best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. I'm streaming on there as well. So if you missed anything, you can go replay it on there. And I just appreciate if you watch the stream from YouTube, because if y'all don't know, my TikTok account was just permanently banned for 2 weeks. I didn't think I'd get the account back. And then literally a week ago, they gave me a notification saying that my account's unbanned. So I didn't believe it. So we're back on TikTok. So cool. Anyway, here's AMPL. So I haven't heard of this stock before. $1.5 billion company, Amplitude. So let's see. Where does their revenue come from? So United States, international. I don't know what they do, but let's go look at the actual financials here. So revenue is up 10% year over year. And did they make net income off that? This does not want to load right here. Might go refresh the app real quick, but they lost 20 million of net income. So yeah, I'd be careful with that one. Not really good sales growth, losing a bit of money. I can kind of see why that one hasn't done too good. So, Sermon said he bought so much Bitcoin at 80K. Yo, dude, you're doing great on that position, dude. Why is XYZ down, and don't this company own Bitcoin? So this is actually Cash App right here. Yo, Kevin, we'll look at NICE after this as well. So this right here is XYZ. This is Cash App. This is Block. Or actually, I'll just show you that. Let's show you the numbers for yourself. Yeah, so look at that. 67% of this company's revenue comes from Cash App. And then they also own Square. But how's Cash App doing? Well, it's down 7% year over year, so that's not good. What about net income? So they are making net income every quarter. This is great news. Look at that. They're making a couple $100 million every quarter. Was last quarter an adjustment? So yeah, they didn't actually make $2 billion last quarter. It was some one-time adjustment, but still, those year-over-year growth rates are incredible. They're making like $300-400 million of net income a quarter. Jack Dorsey owns 8%. I don't know why they haven't been, kind of looks like PayPal stock. This looks identical to PayPal stock. Both of them just haven't really been doing too good. And PayPal is like their biggest competitor. They own, what's it called? Venmo. Venmo, Cash App, kind of same thing there. All right. Target stock. Hey, yeah, so Target, this is, this is a more discretionary grocery store than like a Walmart or Costco. You look at Walmart, Costco stock, they're doing incredible right now. But the reason I think Target's being hurt so much right now is because you don't really just buy groceries there. You're buying, household essentials, maybe furniture, apparel and accessories, shirts, t-shirts, home furnishing items. Beauty is 13%. So first off, I like how diversified these revenue streams are. First off, this is a good dividend play. If we look at the dividend right here, you get a 4.3% dividend. So very nice dividend yield on this company. The dividend is sustainable. But I think the reason investors are a little not too happy with the target is because of the slowing growth. We look at the revenue right here. The revenue is down 2.8% from the previous year. So revenue is down 2.8%. Still, they're making $1 billion of net income a quarter. So the net income is really strong. The dividend's safe. But the investors don't like the slowing growth. And Target did go a little woke. So let's see here. Nice stock. Yeah. Hey, Kevin, this is an Israel company. I don't know if it was you, but someone just commented for some analysis on the stock and I replied to you. I think it was you. What's up, man? Thanks for showing up to the stream. I really appreciate you, man. So here's Nice stock. This is a hidden gem company. They're on my watch list and y'all aren't going to believe this. The only bad news is they're based out of Israel. So, this is incredible, the growth here. So customer engagement, look at the revenue right here. It's up 15% from the previous year. It just hits a new record every quarter. So if I go down here to the revenue, revenue up to 700 million. And look at this net income. The net income is incredible. They're making 100 to 120 million of net income a quarter. So the PE is a 21. Look at how the PE has just gone down, 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 down. So they're trading at the cheapest like they ever have, a 21 PE. They're printing net income, a really good balance sheet. So this is one I really like. Whoa, wait. Who's the share? I don't know who that is. Like we can read like who owns the stock. Like an insurance company owns 1.5. Insurance companies, they can invest the float into stocks and stuff. Hey, someone said Apple Oven. Yo, I got you, brother. This is an incredible growth advertisement stock right here. They deserve the hype around Apple Oven. So this stock deserves the stock price appreciation. I think it might even be a little undervalued right now because check this out. If we look at where the revenue comes from, 78% of the revenue comes from their advertising. And look at the growth here. This is why I love Apple Oven. The revenue's up 71% year over year. This is just incredible growth on the advertising business. And if we go to the net income right here, the net income's up even better. I mean, it's not just top line growth, but the bottom line growth. They're making $600 million of net income a quarter. So, so revenue's up 40, net income's up 144. So another company growing their, 40% margins on this company. Speechy said Target didn't go broke. They did the opposite. Well, I don't know if I can even say this on here, but Target, this is like objective. This isn't like conspiracy. This is true. They sold like little kid t-shirts with satanic pentagrams on it. And I don't even want to say this other word because I'm not going to actually. They promoted some stuff that they shouldn't have. Anyway, let's keep going here. Vanka said SRFM. What's this company? SRFM. So Surf Air Mobility. So they've actually done very good. They're up 16% the most recent day. So Surf Air Mobility is up 16%. What's the market cap? So $300 million company. That's a very small market cap right there. So, first off, you got to be careful on that. But there's some really good news recently for the stock to jump up so much. So congrats if you own them before the little rally there. Let's see. Revenue. So the revenue's down 23% year over year. They have twice as much liabilities as assets, and they're losing money. So, I just be careful with this one. I don't know the news here because there's no earnings on this date. So there was some good news here that I don't know. So, hey, that's interesting. You check Upstart. Yeah, I think that's UPST. Side note, check out CLBR. Hey, we'll check out CLBR. So here's Upstart right here. So Upstart, I think this is like a loan company. I forget. You know what? We'll go check it out. So platform and referral fees, servicing and other fees, interest income. Well, let's see. Are they beating the analyst expectations? So yeah, the orange line is what the analysts were expecting. And the blue line shows that they're beating on every metric. They're beating on revenue. They're beating on net income and EBITDA. So, and look at that. They're barely losing any money anymore. They only lost $2 million the most recent quarter, $2 million the quarter before. So and revenue's up 66%. So I can see why the stock has done so good because they're kind of beating the expectations. Palantir just bought 20% of the company. Oh, you're right. Actually, that's not for this company. I want to check that out. Wait, what was it? What was the ticker symbol? Wait, it was SRFM. So yeah, Surf Air Mobility. You're right. So someone found out the news. Thank you. So if you're wondering, yeah, why did this stock rally so much? What was the good news here? Well, if we go to the shareholders right here, you're right. Check this out. The largest shareholder of this stock is Palantir. Palantir owns 13% of the business. And hey, someone said, just look at Palantir. Yeah, well, look at Palantir too. You know what? I got you. PLTR. And yeah, if you guys got any stocks I'm going to look at, let me know. I'm reading both the YouTube and the TikTok chat. And I appreciate y'all being here. Happy Sunday. So here we go. Here's Palantir right here. Palantir is at pretty much an all-time high right now. So the one thing I don't like about Palantir is the valuation. The valuation is really high. Like look at the PE. The PE is a 617. So they trade at 600 times net income. But here's why they might deserve the hype and deserve the high premium. And look at this right here. Most of the revenue comes from the government. The government revenue is up 45% from the previous year. This is insane. So many police stations use Palantir in their software. So government revenue is up 45%, incredible growth. And the commercial revenue with like S&P 500 companies, commercial revenue is up 33% from the previous year. So both main segments of Palantir are growing like crazy. And also the bottom line, they're making net income every quarter. They also have no debt. Like this is a fortress of a balance sheet. They have no debt at all, lots of cash, and the cash is earning interest. So yeah, Palantir is great. And hey, someone in the chat said, I got Palantir at $16. No way. So he bought the stock. He must have bought it like right here or something. Dang, he bought it years ago. Congrats if you own Palantir, man. They just been a winner. USD Lunar is going great these days. What is Lunar? I think that might be a crypto. That sounds like a crypto. So yeah. Let's see here. Got SoFi. Yeah, I do have some SoFi here in my growthy portfolio. I did want to go. I saw Super Micro Computer. We'll look at Super Micro, then we'll look at SoFi. So the reason the stock rallied so much, like Super Micro right here gapped up, no earnings, but they had a $10 billion deal with Datavolt. So huge deal with Datavolt, which is really supposed to help out the company in the future, in their future financials. This is your server rack company. You buy your GPUs, and then you get Super Micro to install them and everything for you. So net income right here is down 72%. So their margins are kind of collapsing. So incredible revenue on this company. Revenue's up 19, but the net income's down 72. So that means the margins are kind of falling. They only had a 2% margin in the most recent quarter. But again, the reason the stock's doing so good is because of that Datavolt deal. So someone said you got SoFi. Yeah, I do own some SoFi. I bought this one how long ago, man? Probably when that guy was buying Palantir. Should have bought them instead. Well, actually, SoFi's still a really good winner. But yeah, look at this. I was buying Palantir in January 2023. And that's when I've taken some profits on them as well. I've trimmed them, but I regret every share I've ever sold of SoFi because this one continues to impress me. I think they're going to continue to be a winner. They do a lot of student loans. Look at this. 50% of the revenue comes from lending, and that business is up 25% year over year. So the lending business is up 25% year over year, but the real winner is the financial services. They're a fintech, Look at the financial services. It's up 101% year over year. It's literally doubled. So that is what I want to see. If I'm going to buy and hold a company, I want to see growth like that. And also, they're making net income every quarter, which is great news. They used to lose net income every quarter, so people are really taking SoFi serious. And that's why they're at a new 52-week high. And I do believe they're up even like another 2% in the overnight market. Let's see. Yeah, SoFi's up 1.7% right now in the future. So incredible. We're down 0.3. I think, Google, Meta, dragging me down right now, but I still love those stocks. Go over Galaxy and UNH. What do you think? We already looked at UNH, but we'll check them out again. I'll be quick about this one. So United Health, the reason the stock has fallen so much is because they get kicked out of Medicare, Medicaid, or if they get accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years. And that's roughly 50% of the revenue. So that's not good, first of all. So that's why the PE is collapsed. There's just an uncertain future on United Health Group. But if they don't get accused, this could be a great buying opportunity. You get a nice yield, 2.8% dividend yield. The PE is a 12. Look at this. We actually are a customer. We use the OptumRx business. And look right here. The OptumRx revenue is at a new record, $133 billion. billion. I mean, that's incredible growth. And maybe that's why the government's not too happy with them. How does your revenue grow so much like that? So anyway, I like them. I think the risk to reward actually looks pretty fair to buy in, just a little bit. You don't want to certainly go all in on that stock right here, but hey, let's look at BULL. Yo, what up, Connor and Jeff Mack? Yeah, we'll look at Bull stock. So Webull. So this is this app right here. So look, I have given Webull a lot of transaction fees. So that stock, Bull, is literally just this app right here, this brokerage, publicly traded, and here's their stock. They just IPO'd, and there was so much volatility because they only IPO'd like 6% of the shares. So only 6% of the pizza, so to call it, was available to trade, and it made that one slice of pizza look really valuable. So that's why there was so much volatility here. But I think this one, their share structure is a little complicated, so I'm still trying to learn that. But they're a $6 billion company, and if they trade like a Robinhood is an $80 billion company. They start trading with Bitcoin and Robinhood, they could go up a bunch. But good news here, they're a tenth the size of Robinhood, and they make like exactly a tenth of the net income Robinhood makes. So look at this right here. They made the good news. They are making net income, 10 million the most recent quarter, 12 million. So I do like that they're net income positive, and the revenue's up 31% year over year. So hey, I use Webull. Might consider the stock. Let's see. D said GLXY. So Galaxy Digital. So let's see. $2.7 billion company. They just IPO'd. So another recent IPO. They literally IPO'd 2 months ago. So I don't think we're going to have much history here. But look at this. 82% of the revenue comes from trading, and then principal investments, mining. Hey, maybe they mine some crypto. Who knows what they do? So wow, that's incredible revenue. And that 16 billion of revenue in the most recent quarter, only 34 million of net income. So really, really low margins. Was that so? Actually, that was for one-time adjustments. They actually lost money. They have a really good balance sheet though. Look at this. The balance sheet is very strong here. No debt at all. But they just IPO'd. I wish I could have more history of this company. So looks like they're a fintech, maybe another kind of like a Robinhood or SoFi. So look at NNG stock. What is this one? NNG. So let me know if you're talking about Nexion Group, because this is no, it can't be this stock. 2 cents a share. I can't find that ticker symbol. I do apologize. Yeah, they've been advertising a lot overseas. Worst case, UNH already down 50%. What's the risk to the downside? Yeah, I agree with you, William. The risk to reward looks pretty good on UNH. Like it's kind of like the worst is kind of priced in already. So yeah, like this stock is priced for the net income to collapse. Like for the PE to fall so much. Are they expecting the net income to fall the same as the stock price? Like, I don't think the net income is going to fall anywhere near 50%. The net income might fall 10, 20%. Still, the PE is dog cheap. So anyway, I agree. What app is this? Yo, X6M. This is a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio. Just that very first link there if you want to get it. It's an affiliate link too, so I'd appreciate that. It's a free app though, but if you deposit money, we'll both get some free stocks and stuff. But anyway, yeah, someone said there was SRFM and then someone said SFM. So yeah, this is Sprouts Farmers Market. This is a grocery store. If anyone's heard of Sprouts Farmers Market, look at this stock. It's literally moved like NVIDIA. This is incredible stock price appreciation on Sprouts Farmers Market. And here's why the stock has done so good. So as you know, for grocery stores, historically very low margin business, a Kroger, Walmart, very low margin business. But Sprouts Farmers Market, they sell they're like a healthier grocery store. So they've had a lot of pricing power. So if we go to the net margin right here, which is the most important metric, look at this net margin. It's up 32% to an 8% net margin. They grew their margin 32% year over year. Incredible. So yeah, look at this revenue. So revenue's up 18%, but net income's up 57%. So that's that net margin growth. So, and they're also a huge buyback company. Actually, I'll be really quick about this. If we go to the amount of stock buybacks this company does, yeah, look at that. They just upped the buybacks. They literally bought back $218 million of stock in the most recent quarter. And this company has no debt. Look, Sprouts Farmers Market, total debt, they just paid off all their debt. They have $6 million of debt. So no debt pretty much. So $6 million of debt. And look at the cash, $258 million of cash. So anyway, I like that one a lot. And now I do own them, so I might be biased. But the margin growth on Sprouts Farmers Market has been great. Someone said, look at Launch Coin. I don't know what that one is. Landon said, what I hope I can find this stock. I don't know if this is the ticker symbol NUVVE. Okay, here we go. He said was super high, now is low. Should buy or not buy. So yeah, unfortunately, I'm going to say not buy this one. So here's why I'm going to not recommend this one. First off, they're at an all-time low, but it's so risky. Look in the top right. You see market cap? That's how much the whole company is worth. So this whole company is worth $9 million. That is extremely low. And they lost $6 million in the most recent quarter. So let's say you go buy the whole company at that valuation, at a $9 million valuation, or you buy the whole company at $9 million. You're buying a company that lost $6 million just in the past 3 months. So be very careful about that. It looks like they sell electric vehicle sales, and the sales were nothing. What were the sales in the most recent quarter? 900,000. So someone said, exit a scam page, follow me from your live. Yeah, hey, guys, watch out for people impersonating me. I'll never follow you. I sell nothing. I don't have a course, a book, a Discord, a WhatsApp, a Telegram. I have literally nothing. So please watch out for people impersonating me. So someone said LKNCY. I think this is Luck and Coffee. LKNCY. So this one, this company is coming for Starbucks. Like if we look like from a couple years ago, I don't remember the exact numbers, but basically this is a China company. This is a pure Chinese company. Yeah, look, the revenue's even in Chinese. So we'll switch the revenue from Chinese to US dollars. But basically, they are taking market share like crazy from Starbucks in China. Just because the stuff in China is so ridiculously expensive for Starbucks there for some reason. But anyway, let's go look at some of the data here. Look at this number of stores. The total number keeps growing every quarter. I mean, incredible. Same store sales growth. Wow, 8%? McDonald's would kill for that. So yeah, look at the revenue. Wow, the revenue's up 40% year over year, and they're making net income on that. They're making a lot of net income, a couple $100 million a quarter. And this is in US dollars, not in Chinese. So this is just a really cool company. If you want exposure to Chinese, it's basically Chinese Starbucks. That's what this is, Chinese Starbucks. And unfortunately, Starbucks has not been doing too good. Their pricing power is gone. But they did just get a new CEO, Brian Niccol. That's like the one saving part of the company. Brian Niccol is the new CEO of Starbucks. He used to be the CEO of Chipotle. And yeah, so here's the bad news about Starbucks. And if we look at the revenue grew 2% year over year. So the revenue's up 2% year over year, but the net income is down 50% on Starbucks. And this wasn't some one-time adjustment. This was real, and that's really bad news. They couldn't even afford the dividend. So EPS was 34 cents. The dividend cost 60 cents. They couldn't even afford the dividend by half. So they're in a rough spot, actual Starbucks. Kraken Robotics. Hey, if you got what's the ticker symbol for Kraken Robotics? I'll check it out for you. But my favorite robotics play is Symbiotic, SYM. So here's Kinder Morgan. This is your energy infrastructure play. They own a bunch of pipelines. Yeah, hey, Mason, this is a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio. First link there. It's a brokerage though. But Kinder Morgan, there's one thing you got to know. This company gives you a K1 tax form. They're actually an MLP, a master limited partnership, and that means they give you a K1 tax form at the end of the year. When I first started investing, I didn't know what that was, and I was very surprised to get one. It cost me like $200 with an accountant to get it filled out. So you got to be careful. If you're buying the stock, just know you're going to get the K1 tax form. But because they're an MLP, they have this crazy dividend, a 4% plus dividend. The dividend's sustainable. There's no natural gas pipelines, products pipelines. So yeah, when your assets are mostly pipelines like that, you're an MLP. So. Yeah, look, incredible net income, by the way, 700 million of net income a quarter pretty much. So, good. Dude, I've seen their investor presentations. It's so impressive. Kinder Morgan is a great, well-run company. Just know you'll get the K1 tax form. Someone said, hey, yo, any companies that you'd short? I have some on my watch list. Like some stocks on my watch list, I added them because the fundamentals are terrible. I don't really short. I have never short a stock. I've bought a put before, but I don't really short anything. I'm looking for the stock. There was one terrible stock, but I don't think I'm going to be able to find it because it was maybe a long time ago. Jeez, you know what? Sorry. Anyway, let's keep going here. Oh, Kraken Robotics, KRK. NF. Wait, really? That's a weird ticker symbol. KRKNF. Hopefully I can find it for you. Yeah, I can't find that stock. Maybe I can type in maybe I can't find it on this Kraken. Yeah, hey, I don't think I'm going to be able to find Kraken Robotics. I do apologize. All right, Kraken, spelled that way. Oh, I found it. We found it. Let's go. So what? Okay. Wow. First off, ticker symbol PNG, Kraken Robotics, all-time high. So congrats if you own them. You got to be up on your position. They're only a $1 billion company, so that's a very low market cap. So that means they could potentially grow more. Products are 72% of the revenue. Hey, look at that. That's the trend you want to see. New record revenue. Are they profitable? Yeah, actually, even though the net income was only $100,000 in the most recent quarter, they didn't lose money. They're still making net income every quarter. So really good news there. Yeah, really good balance sheet as well. And they just made cash from operations. They just made some free cash flow. So I can see why P&G is doing so good. There's probably just a lot of momentum over there right now. So do you invest in crypto coins? Nah, not really. Yeah, I wish I did though. You see Bitcoin right now? Bitcoin's crushing it. Yeah, we found it. Let's go. So let's see. IONQ. Hey, this is like a quantum play, right? So IONQ, and we'll look at JFIN. So here's IONQ right here. So the stock's actually been doing pretty decent recently. I think it's just the momentum for the whole industry. Uh, this is what I just can't buy this stock though, in my opinion. And I'm not trying to be bearish on your stock here, but this is an $12 billion company. So the whole company is worth $12 billion. And look at the revenue, 7 million, 11 million. The valuation is nuts. And there's so many smaller companies with way better fundamentals that I just rather own, like an InnoData or a Delcath Systems or, Dave, all these other stocks. I can't pay this valuation. Look at the money they're losing too. They lost 200 mil last quarter, 30 mil this quarter. They're losing. They have a really good balance sheet though, because they've diluted the shareholders so much, but there's no bankruptcy risk here, but I'm just staying away from that one just because the valuation is so high. So, hey, what's up, Charlie? Charlie said JFIN stock. Let's check it out. So I don't think I've heard of this company before. JWin stock. Are you all in on Hood? I'm not. I got 5 shares of Robinhood left. I'll show you that real quick. This is my growth portfolio. I got 5 shares of Robinhood. So yeah. So here's JFIN stock. What's the market cap? Yeah, another really small one, a $900 million company, but the stock's done pretty good recently, and they just paid a dividend. Yo, they're paying dividends, so they must be net income positive. Yeah, whoa, 75 million of net income just in the most recent quarter, and that was real. That was real growth. Revenue grew 20%, so that means they're really growing their margins. Actually, I see why you like this one. I see why they're doing good. Even though they're a small market cap, they are still making a lot of net income. So Hood at $200, that would be crazy. Hood at $200, that'd be a double from here. But, Hood, the reason this stock has been doing so good, I mean, they've really blown away investors' expectations. Like if you go right here, look at this. They're making a couple $100 million of net income a quarter. I mean, this is incredible. Making a couple $100 million a quarter when look, they used to lose a couple $100 million every quarter. So, and they're so innovative, new products, and the sales growth is really good too. 50% revenue growth. Also, a lot of people are using Robinhood Gold. They get a lot of subscription revenue from that. So, what's going on with Snowflake and EPD? Yeah, hey, EPD is kind of like Kinder Morgan. Let me pull up EPD real quick. So this is Enterprise Products. This is another MLP. So before you buy this stock, just know you will get a K1 tax form. But because you're an MLP, you get a 6.6% dividend yield, and that yield is actually sustainable. Yeah, look at the payout ratio, only 77%. So that's like your high yielding dividend play. So what up, Farah? Let's go to Snowflake right here. So there's some good news and bad news about Snowflake. This is like Palantir's biggest competitor. And the growth is incredible. I mean, look at this product revenue growth. I mean, this is why Snowflake is doing so good, and they deserve all the hype. I mean, in 2020, revenue was nothing, 250 million. Now for the fiscal year 2025, it was 3.5 billion. I mean, the growth is incredible. It's up 26% year over year to literally $1 billion just in the most recent quarter. But the bad news is the part I don't like about Snowflake is the money they're losing. They are losing a lot of net income, and the trend isn't really getting better. They lost 430 million the most recent quarter, but the sales growth is incredible. So yeah, there's the good news and bad news. If you can buy and hold 5 stocks for a decade, give me your top 5. Well, first off, if we're going out a decade, I just trust, a McDonald's, Waste Management, Meta, maybe I want a chip play in there like a Taiwan Semi and AMD, Nvidia, and yeah. McDonald's, I love McDonald's is really a royalty real estate play. So, what about Neo? Yo, hey, what up, Odyssey boy? He said TSM. Yo, Odyssey, hope you're having a good Sunday. We'll check them out too. Good to see you here. So here's Neo stock. This is an ADR. So this is a Chinese company. So first off, they're Chinese. I don't like that. And the stock's at my phone's getting low here. Sorry. So this is the thing you got to know. Look at the top right, the market cap. We'll explain this very simply. This explains why the stock is at an all-time low. The whole company is worth $8.7 billion. So imagine that you buy the whole company at an $8.7 billion valuation. You're buying a company that literally loses $1 billion a quarter. They literally lost $1 billion just in the most recent quarter, $1 billion the quarter before. So they're losing a boatload of money. Someone said, "Hey, bro, chill. I'm Chinese." Oh, that's awesome, man. I'm nothing against you, man. I just know that the Chinese stocks, they always trade at very low valuations. But there are a lot of good Chinese companies. Like, I love Tencent. Baba's pretty good, but Tencent is the best Chinese stock. I own a Chinese stock. I own one Chinese stock, ticker symbol FUTU. So I'm not against. Anyway, let's keep going here. Oh yeah, TSM and Amazon. Yo, we will look at Amazon. I own them too. We'll check them out. So again, here's Taiwan Semi. This is your chip play, and they're at an all-time high right now. So they're doing what they're supposed to be. They're at an all-time high right now, just like Nvidia. If we look at AMD or Micron or something, they're not at all-time high. So Taiwan's been doing great. And if you buy the stock right now at all-time highs, you still get a 1% yield. That's crazy, a 1% dividend and exposure to chips. And look at this low valuation, a 27 PE, that's pretty fair. A 27 PE historically, that's really fair. And look at their market share for these wafer chips. It used to be a 61%. Now it's a 67%. So they're growing their market share and also they're growing their profits. The net income is up 55% to $10 billion just in the most recent quarter. 10 billion the most recent quarter, 10 billion the quarter before, 10 billion the quarter before. I mean, they're printing money. So that's why they can afford the dividend. I know they're doing some stock buybacks as well. So I think the reason the PE is so low is just because they're based in Taiwan. Oh yeah, let's go Amazon right here. What up, Knees? Your name almost got me there. Almost got me banned. So here's Amazon right here. So this is such an innovative company. A lot of people know Amazon for their website, Amazon.com, but the most valuable part of Amazon is actually the Amazon Web Services, the AWS business, so the number one cloud provider in the world and number one market share. And look at the annual revenue. It's over $107 billion of revenue for the full year 2024. This brings the most net income, to the bottom line out of all their other revenue segments. So also, this is incredible right here, the net income growth here, because if we look at the revenue, first off, it's hard to grow these numbers. $155 billion of revenue in the most recent quarter, incredible. And if you look at the net income on that, it's up 64%. So revenue's up 9%, but net income's up 64%. So, this is a huge metric for them, for Amazon to grow their net margin. Look at this, an 11% net margin in the most recent quarter. We zoom out, this used to be a single-digit margin business, even lower than it was negative at one point. So they're really growing their margins here. I love how innovative they are. AWS, they even have their own QNAP. They're coming for SpaceX. They're launching like a satellite mobile provider service. Yo, Ron, how's it going, man? Appreciate you stopping by. Stream's going good. Yo, we're actually probably going to end the stream here in like 20, 30 minutes. We're already at the 2-hour mark. Man, time's flying by. Hope you're having a good Sunday, everyone, by the way. Let's keep going here. I'm loving this. So let's look at Elf right here, Elf Beauty. So this is your cosmetics play. Or someone said the problem with Amazon is that their stock comp takes about $20 billion. So yeah, actually, Amazon dilutes you by about 1% a year. And I'm actually okay with that because, actually, I'm going to go back to Amazon. I'll be super quick about this. Amazon could pay all their employees with the money that they have, but they're choosing not to. This is why I'm okay with it. If we go to the cash from investing activities on Amazon, they are investing like crazy in the future. 30 billion the most recent quarter, 37 billion the quarter before. So Amazon is just a growthy company, and they shouldn't be buying back their own stock. Like Google pays so much stock-based comp, but they buy back their own stock. Amazon's just not buying back their own stock, and investors I think are okay with that. But you're right. Eventually, I think Amazon will go to buybacks, and they do dilute you 1% a year. So let's go back to Elf. I'm so sorry, went on a little tangent there. But yeah, Amazon I love as an innovative buy and hold for the long run company. So here's Elf Beauty right here. This is your beauty and cosmetic stock, and they've really grown and taken market share from like Estate Lauder. And Odyssey Boy, I forgot to say, thank you so much for the 10 lightning bolts. Thank you, sir. I'm saying your name wrong. Odysseus Boy. Thank you so much, man. But look at this annual revenue right here. This is why so many people love Elf Beauty. I mean, look at the revenue growth. I mean, they're really taking market share. They went from 282 million to 1.3 billion. I mean, just in the most recent quarter, 330 million. So what the revenue grew. So the revenue only grew 3% year over year. So revenue grew 3%, but the net income's up 95% year over year. So actually, they're growing their margins, which is good news. Eric said, what's your YouTube channel? Hey, yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Yeah, just type into YouTube Nathan Robert. And also, I'd really appreciate you just watch the stream from there. If you miss anything, you can replay it. Hey, by the way, hit the follow button. We stream every Sunday at this exact same time. I do this stream at this exact time every Sunday. And I also stream every other day as well. So if you want to hit the follow button, I do streams all the time. And I sell nothing. I don't get I don't have a course, a book. I don't got none of that. So. Oh yeah, and yeah, I do. So yeah, Eric, if you sign up for this app, also yeah, do you get it? Yeah, I do. So we'll both get some free stocks if you sign up and deposit for this app. But yeah, that's if you want to. If you don't have a brokerage or anything, you want to get this app I'm on. Link tree in bio, first link there, and we'll both get some free stocks if you deposit. I love this app it's my main app. It's an affiliate link, so I'd appreciate that. But anyway, this is a great app for analysis. So here's Welltower right here. So yeah, Mac, what's up, brother? So this is a senior housing healthcare play. So they own a bunch of senior housing care facilities, and that's an industry that's like really growing right now. Like there's not enough senior housing care places for like the growing age population or something like that. And that's why this stock is doing incredible. They're at an all-time high. They're also a REIT, a real estate investment trust. So most of their assets are actually, oh yeah, look at that. Like our look at the triple net leases, but senior housing operations. Whoa, the revenue's up 38% year over year. Wow. So Welltower is really growing their senior housing operations. How's the triple net leases doing? Yeah, this is a REIT right here. You really want to look at the cash from operations for this stock. You don't look at the net income because it doesn't include the depreciation and the amortization, which is so important for real estate assets. So yeah, this is a great company, man. Another one that's kind of like this, and I haven't talked about this stock in a long time, and I love it. I made a YouTube video about this as well. Here's CareTrust REIT. They do exactly what they do. They're another senior housing kind of company. And they've just seen incredible growth. If we go to the revenue, it's up 53% year over year, 96 million of revenue and 65 million of net income. What's the 67% net margin? This is just another huge growth company. There are a lot of problems with Welltower, in my opinion. Like what, Colomer? What's up, man? The revenue looked very strong on the growth there. Boomers getting old, Max says. Let's see here. P8NW. Yeah, hey, if we got, Nancy Pelosi just bought the dip on that stock. Yeah, if we go to Nancy Pelosi, these super investors, Warren Buffett, Nancy Pelosi, they have to reveal all the stocks they own and all their trades by SEC law. And one of our top holdings right here is Palo Alto Networks. This is like the number one cybersecurity stock. I love. Hey, we'll check out SNTI as well. Sorry if I don't get to all the stocks here. So PanW, this is your main cybersecurity play right here. And they have this huge subscription model. Look at that. 55% of their revenue comes from their subscription revenue and, all reoccurring. And the growth is insane. It's up double digits, up 20% year over year. I mean, look at this annual growth of the cybersecurity subscription. Cybersecurity isn't really going anywhere. And they're making net income every quarter, couple $100 million of net income. The free cash flow is even better, $500 million to $2 billion. So great company there. Quite a large hey, it's all good, Colomer. Hey, how's it going, man? Hope you're having a good Sunday. And CEP said, hi, how's it going, dude? All right, so ITD, he's been saying this stock a few times. I'll check it out for you. Let's see, SNTI Biosciences. So yeah, this isn't I kind of predicted this from the ticker symbol. This isn't a really stock we really cover on here. I don't really like to talk about these. If you look in the top right, you see the market cap. It says 55 million. So first off, this whole company is worth $50 million, and the stock's at an all-time low. Do they sell anything? Revenue is zero. So yeah, they actually don't sell anything. So if we go to revenue right here, yeah, that's from 2023. So if we go to 2025, there was no sales the most recent quarter. So they don't sell a product or a service. They lost 15 million. So yeah, it's super risky. Be careful. Yo, Terry said Teradyne. Hey, I've never heard of that. Is that a stock? Give me the ticker symbol for Teradyne or Teradyne. Yeah, well, I'll check that stock out for you. Would you rather buy a stock one time or reoccurring time? So yeah, actually, the safest way to really get exposure to a stock, in my opinion, is to dollar cost average. Like you said, slowly buy into the company. Instead of spending all your money at once buying a stock, slowly buy into it. But let me just say that doesn't always work. Like this stock right here, you can see I slowly buy into the company, but they're at all-time lows. So make sure you're buying into a high-quality company. Always do your own research. None of this is financial advice. I'm just a college student. I'm definitely not an expert. By the way, I don't sell anything. I don't have a course book, Discord. I don't got nothing like that. So let's go look at TER. Let's check it out right here. So what's your highest conviction play? Ooh, yo, you'll love my most recent YouTube video. I'll answer that right after this. So here, I've never heard of this Teradyne. So $15 billion company. The stock, unfortunately, hasn't been doing too good. So I don't expect too much from the financials because usually the financials explain whether the stock is doing good or bad. So look at that. They're actually a robotics play. How's the robotics business? Ooh, down 20% year over year. Semiconductor test. Hey, I don't know what that is, but semiconductor test revenue is up 25% year over year. Really good growth right there. And they're making net income every quarter. Whoa. So revenue's up 14, net income's up 55. Yo, they're making like 100 to 200 million of net income a quarter. That's very strong. Margins are growing. Really good balance sheet as well, man. Hey, I like Teradyne. I do wonder why they've underperformed a little bit. Actually, the financials are pretty good there. So I like that one. So, oh yeah, what my high conviction play right now, it's actually my most recent purchase. And I'll be quick about this, is actually ticker symbol PGR. This is Progressive Corp. And this stock's not at all-time highs. Kind of like the market right now. I like analyzing stocks on here because we can see more data on here for free. But yeah, here's Progressive stock. I think the valuation is pretty fair. I mean, look at how they've fallen. And this is a highest of high quality company. I mean, look at this. Obviously, they're an insurance business. Maybe you've heard of Flow and the mascot. But look at this personal lines right here. Of insurance is incredible. If we go to on a quarterly basis, it grew to a new record of 23%, literally $19 billion just in the most recent quarter. So the business is just growing like crazy. What about this? They're also commercial lines. Look at that annual trend also at a new record. So first off, just a super growthy company. And look at the net income they're making. They're literally making $2 to $3 billion in net income a quarter. They're trading at a 6% earnings yield and a 10% free cash flow yield. The free cash flow is even better on this company. $5 billion in the most recent quarter. So they literally trade at, you get 10% of your, if you bought the whole company, like literally, if you bought the whole company at right now's market cap, you would get 6% of your money back in after-tax net income every year and 10% of your money back in free cash flow a year. And you're kind of just trusting the management to reinvest that for you. So the valuation is literally dog cheap on this company, even though they've done so good. So go check out my most recent YouTube video for more about that one. Check out GAMB. So yeah, I don't want to say the name of this stock just in case, but I bet I know what they do. So yeah, I don't think I can show those words on screen. Last time I showed this stock, I actually got taken down. So luckily we're over the 2-hour mark. So anyway, look at this right here. I actually like this. They're making a lot of net income, 11 million in the most recent quarter. So incredible net income, good balance sheet growth. Wait, I thought that said Mark Benioff was the largest shareholder. Anyway, yeah, that's what they do. And look at the revenue up 25% year over year. So, hey, I know there's like some tax hurdles for them, like new tax to the industry, but the financials look really good. I'd still be really careful with that industry, though. They're kind of like a DKNG, haven't really gone anywhere because of the regulations of the taxes and stuff. So, but they're interesting, though. Yeah, hey, no problem, Terry. Hope you're having a good Sunday. My company, I get shares each year, PSN. Wait, are you talking about ticker symbol PSN? Because that was, PSN, Parsons, huh? So So engineer or someone in the chat here works at this company right here. Let's go see how they're doing. So this is Parsons stock. Yo, you got any insider knowledge for us? But no, $8 billion company. The stock actually hasn't been doing too good. I wonder what happened. Well, let's go find out. Let's go look at their financials. So Federal Solutions, Ooh, so it looks like they lost their growth. So revenue's down 7% year over year on the Federal Solutions. Critical Infrastructure, hey, that's good news. That's up 14% year over year. So that business is growing, but the Federal Solutions is down. Let's see, are they profitable? Yeah, whoa. That's really good net income. So even though the revenue is slowing, revenue only grew 1% year over year, the net income's up 50% year over year. Yo, that's incredible. They're growing their margins like crazy. So they're super profitable right now. So wait, Parsons Corporation Employee Plan. So yeah, actually, I believe that you get shares from the company because half of the company's shareholders are employees. That's actually crazy, the corporate pension plan. So hey, that kind of aligns. So like employees are more aligned to really do what's best for the company, work the extra mile if they own stock in the company. So because like, hey, if you work hard and the company does good, your stock portfolio is going to like it too. So hey, Yoke said DEFT, please. Yeah, let's check it out. So DeFi Technologies. Looks like they just IPO'd about a year or two ago. So there's not too much history. What's the market cap? So look, $999 million company. So very small market cap. But what is Valor Inc? I don't know what that is actually. Well, let's just go down here. So revenue, how do you lose revenue? Like the revenue was negative last quarter. That's so weird. So anyway, net income, it just looks choppy right here. The numbers are just a little choppy on this company. The balance sheet looks weird. I got to do more research on this one. And they're a Canadian company. So we were looking in, I didn't even realize. So I would just be careful with that one. I mean, I don't know. Yo, what is Veolia? What's the ticker symbol for that stock? I don't know what that is right there. So yeah. RGC stock. Oh, RGC. That's Regencell Biosciences. So yeah, this one basically was a huge runner recently. So yeah, basically this company got FDA approved and could sell a product. The stock went up like crazy, and now it like is all the way back down. It's really weird. They had a huge pump, and then it all reversed because if you go to the revenue, this is from 2017. There's actually no revenue right now. They're a revenue-less company, but that news was like I believe that they finally got FDA approval. So, and they did a stock split that day. I don't know, man. There's just no revenue right now, so I'd be careful with this company. So. I was watching your vids. Would you say invest in Progressive or Lilly? Also, DJ Profits. Yo, I love both of those companies. I like Progressive at right now's price, and I want Eli Lilly to go a little bit lower. And actually, I want to go over Eli Lilly. Oh, no, we'll look at SAP. We'll look at 3M. We'll get to these two. And hey, thanks for watching the video, Mario. I really appreciate you. So I would buy Progressive right now, and I do own them, by the way. I don't know if I showed my position in the video, but I got 2.4 shares of Progressive right here. And also, Eli Lilly, this is such a growth company. I mean, it's ridiculous. I'd love to potentially get this one under like 750. But look at this right here. They sell a bunch of different prescriptions, obviously. Eli Lilly does. Look at this. Their main prescription is Mounjaro. Look at the growth here. This prescription is up 112% from the previous year. That's incredible growth. I mean, literally in 2022, they created the product, and it literally did $3.8 billion the most recent quarter. Also, their next biggest segment of revenue is Zepbound. This is their weight loss prescription, and it's seen immaculate growth. You know, they just started this product in 2023. Revenue was $175 million. And now it's $2.3 billion. I mean, they could just create these prescriptions and people just buy them. It's crazy. So anyway, just incredible growth. The net income is actually artificially low. They had some one-time adjustments. The PE ratio is actually like a 40. But I just love the growth here. Revenue's up 45%, and I just can see it continuing to grow. So SAP right here. So had this on my watch list for 2 years. And like the business, what do you think? Hey, Mac, well, check that one out. So here's SAP. This is like the number one provider. I think of like, I forget. It's something like service related. So, or application technologies. Yeah, like information systems. So application technology revenue. They're not a US company, but they're growing like crazy. Yeah, 9 billion of revenue in the most recent quarter. Where does the revenue come from? So 32% from the US and then all these other countries, 15% from Germany. But look at the net income right here. This is crazy. They made 2 billion of net income just in the most recent quarter. So after tax profit was 2 billion. Incredible. Jonas said, what app are you using currently? Yeah, hey, this is a brokerage right here. If you want to get this though, it's in the link tree in my bio. It's that very first link there. It's free. I love this app for all the analysis you can do and stuff. So let's look at this stock right here. WLDN. So Wilden Group. Hey, wow, this one all-time high on this company. So how do you check if a company is in debt? You just go to the balance sheet and you can see the debt. And I'll show you that right here. So here's Wilden Group. This stock's at an all-time high right now. So congrats if you own them. And they're an energy play. So look at that. 82% of the revenue comes from energy. It's up 25% year over year. We go to the balance sheet right here. You can see the assets and the liabilities. Now, not all liabilities are debt, but it's still IOUs basically. And we can just scroll down here, current debt. So this company's current debt is 2.5 million. Let's see, total long-term debt and capital lease obligations is what you really want to look at. So this company has $94 million of debt and cash on hand at $38 million. So they're in a pretty good spot. Plus they're making a couple million a quarter. So yeah, their net income positive finally. Look at that, making a couple mil a quarter. Revenue's up 25% year over year. What about free cash flow? Free cash flow's a little choppy. They must, let me see. Oh yeah, look, they just invested heavily back into the company, 34 mil. So hey, I can see why that one's doing pretty good. Let's see, VIG or VTI. I think that's the basically NASDAQ. So Vanguard dividend appreciation versus the total stock market. I'd probably, both are great. Both will probably have similar returns, but VIG will probably do a little better. So yeah, look at the top holdings in this ETF right here. It breaks your money up for you. It's an ETF. Largest holding is Broadcom, the Microsoft, JP Morgan, Apple, Visa, Costco. So I really like VIG. And what are the largest holdings of VTI? So VTI is the total stock market. This owns a little bit of literally every stock that exists. So every stock except for some of the really micro caps, but they own over like 2,000 stocks, but it's market cap weighted. So the top stocks of the most market cap will be at the top. So yeah, Microsoft, Nvidia, Apple, Amazon. So yeah, both are great. Both will probably keep returning like 7%, 8% plus a year, So here's DUK Energy. Yeah, Duke Energy and PFE could be the best. Oh yeah, PFE is a good dividend play. So here's Duke Energy right here. What's the yield? This is another utility. So yeah, 3.5% dividend yield on Duke. Let's see, the PE is a 19. Yeah, electric utilities and infrastructure. So yeah, the revenue's up 5% year over year. Gas utility infrastructure. If we go to the net income right here, they're actually a regulated utility. The government gives them like regulated returns. Like they'll give them money. So yeah, wow, look at that. Up 21% year over year. They're making over $1 billion in net income a quarter. So anyway, Duke's doing pretty good. Nice utility play right there. So are you bullish or neutral for this week on data coming out? Yo, this week it's I don't know, man. With the new EU tariffs, Canada, Mexico tariffs, I don't expect too much green this week. But I don't know. Anything could happen. I mean, the past couple months, the NASDAQ just keeps on going up. We're pretty much at an all-time high. Yo, what up? Albania said Dizzy. Yeah, I try to look at all the chats here. Yo, we already looked at Taiwan Semi a couple times. So I'm actually about to end the stream here, guys. I really appreciate y'all being here. Hope you have a good Sunday. If you want to hit the follow button, by the way, we go live every day, but we go live every day at the same time on Sunday. So Sundays are my main streams. So we go live on every Sunday like this and look at stocks to try and look to buy next week. So here's Motorola. So yeah, what up? Burrito said MSI stock. And we can look at Lucid and GPU. So Motorola, they've really innovated. As we know, Motorola used to be like just sell cell phones, but they've really innovated since then. So let's see. Software and services, look at the growth here. That's some really good growth. Hits a new record every year. Products and systems, that's also up double digits year over year. Good news. So what about net income? So yeah, look at that, 400 to 600 million in net income a quarter. Motorola is actually surprisingly really good, really profitable. So did they pay a dividend? Hey, a 1% dividend on Motorola. Not too shabby. Oh, wait, GPUs, is that an ETF right here? No, it's not. So hyperscale data. So unfortunately, yeah, if you look in the top right, the market cap, this is one I'd stay away from in my opinion. The whole company is worth $9 million. So $9 million company, really risky. I'd be super careful. I probably wouldn't even buy this one. And they lost 5 million the most recent quarter, 5 million the quarter before. So yeah, nothing's really blowing me away that I really want to buy them. So here's another stock that I don't really want to buy, and this one kind of deserves to be at all-time lows. This is Lucid right here. If you're wondering, how does this happen? How is this stock just at an all-time low when the market's at an all-time high? It's because first off, they're diluting you like crazy. And second off, they're just losing a boatload of money, hundreds of millions a quarter. The trend is getting slightly better, which is good news. But yeah, $400 million loss just in the most recent quarter, and the whole company's worth $7 billion. They've lost over 20% of the whole market cap just in net income, on top of diluting you like 20% year over year. So I feel bad if you own that stock. Just they have not been winning. So just said OKLO stock. Yeah, hey, that's a nuclear stock. So, oh yeah, hey, OKLO, this is like, they have some really good talent. They have a really good management team, but right now this is a startup right here. So they want to make like mini nuclear reactors, because if we go to their revenue right now, you see how it says no data? That's because they've never sold anything. They don't sell a product or service. They're a revenue-less company. And so it's just a momentum play right now. You're really waiting for them to finally start selling a product. So Lucid, the free stock. Hey, Lenny. Actually, when the free stock I got was actually Ford, and I got some. Where was that? Oh yeah, look, I got a free share of Ford, and I just sold it when I got this app. Yeah, if y'all want to download this app, you'll get some free stocks if you sign up and deposit $100. It's in the link tree in my bio, first link there. It also give me some free stocks. Help a brother out. So yeah, let's see. MU stock. Is that, oh yeah, Micron Technology. So yeah, this is like an NVIDIA competitor right here. They're also in the computer networking business. Look at this recovery since the April dip. It's been very impressive, and this is the best part right here. Look, they're in the computer networking business. It's 55% of the revenue, and look at the growth here. I mean, this is why a lot of people like this one. I mean, the revenue is up 97% from the previous year. So the revenue has literally doubled for their main segment of business. Great news. Look at that. Half the revenue comes from the. Okay, hold on. TikTok saying I'm AFK. Okay, we're back. TikTok said I was AFK, and I had to fill out a CAPTCHA. So half the revenue comes from the U.S., then Taiwan, China. So anyway, best part about this company is like how the net income has recovered right here. Check this out. $2 billion of net income just in the most recent quarter, up crazy. Because if we zoom out to last year, this was a tough buy. Look, they were losing over $1 billion a quarter. Now they're making over $1 billion a quarter. So very profitable company. You get the nice dividend. I love the growth there. So Reg said NBIS, Nebius. That's actually a stock that NVIDIA owns. NVIDIA owns some individual stocks, like they own some of CoreWeave, ARM, and they also own Nebius. So this is actually a really niche company, and I'll show you what they do. Wait, where does the revenue come from? Half from the U.S., but yeah, they own Nebius, Triple 10, whatever Toloka is. But best part here is just the growth of the sales. Like, look at the year-over-year growth rate. I mean, the revenue went from 11 million to 55 million. So incredible revenue growth. And what about net income? So they are still losing money, 100 million a quarter, but NVIDIA does own some of them, which is interesting. Reddit, CHMI. Yeah, hey, Reddit, I own that one. Yo, that one, dude, how's it going, brother? So yeah, let's see right here. Oh, what up, Joseph? CLBR. Yo, we'll look at that one too. So I do own Reddit, and mainly because this is another crazy growth company. I mean, first off, this takes a lot of risk off the table. This company has no debt at all. Reddit is a debt-free company. I mean, look at this fortress of a balance sheet. No debt, $2 billion of cash. The cash is earning interest. And look at the sales growth. I mean, I don't know how Reddit pulled this off, but the sales are up 62% year over year. Incredible revenue growth. And the net income, they're making net income now. Every quarter. So this is great news for Reddit. And that's why I do own this one. I might be a little biased because I own them. But yeah. So what about SMR? I didn't know nothing. Yeah, SMRs, they have like one good contract now. So yeah. And that one dude said, thoughts on AMD? Yeah. Good to see you, that one, dude. Happy Sunday. Happy Sunday, everyone. Yeah, if y'all want to help me out, yo, don't forget to drop a like on the stream for me. I don't sell nothing. I don't got a course, a book, but let me analyze AMD for you. So I might be biased. I do own this stock, but here's why I own them. And they definitely are not outperforming NVIDIA because NVIDIA right now is at an all-time high and AMD is quite a bit off all-time high. So they have underperformed NVIDIA, but there's still some things I love about this company. I look at the PC GPU market share. AMD literally has a 17% GPU market share. I mean, that's incredible. Obviously, we knew that, but this is mainly a data center play. Check this out. Half the revenue literally comes from their data center business, and the data center revenue is up 57% year over year. So if you're looking for exposure to data centers, AMD is a really good play. And also not just the top line growing, but the bottom line. Hey, Reddit is like one of the last real places on the internet. So free cash flow is up 91%. Net income's up 500%. I mean, they're printing money now. And look at this monster balance sheet. Again, no net debt on this company. So AMD is one I really like. So let's see, CLBR stock. What's this one? CLBR. So I don't know if this is what you're talking about here. I think it is because, hey, is that like a new all-time high today? So yeah, congrats if you own them. Very small company though, a $365 million market cap. So yeah, that is a really small market cap. So you do got to be aware of that. And it looks like they don't even sell anything. So yeah, if we go to revenue, it says no data because they don't sell a product or a service. And they lost net income. Luckily, they have a really good balance sheet, lots of cash, no debt. But yeah, this is a revenue-less company. It says acquisition corp. I wonder if they're like a manager. Like, I don't know. There's something I don't know about this company. I probably wasn't too helpful. I do apologize. But they're interesting. The stock's been doing really good, actually. So, let's see. Yo, there's that one dude and that one join. What's up, man? Yeah, hey, that's awesome. You're interested in getting, starting to invest. So someone said HOTH stock. What is this one? So Hoth Therapeutics. Yeah, another. Yeah, I don't really want to cover this one. $19 million company. And the stock's at an all-time low. So yeah, very risky. Whole company's worth $19 million. Not one I really want to look at. But oh, someone said CHMI stock. So yeah, this is a mortgage REIT right here. Basically, this is like a dividend trap, in my opinion. Because if you go to the dividend right here, yeah, look at this. The dividend yield is a 21%. Look at the annual dividend. They literally cut their dividend every year. 2020, the dividend was $1.20. Now the dividend is 60 cents. So since 2020, the dividend has been cut in half. And look at that payout ratio, 800% payout ratio. Anyway, this is just not one that I don't expect this to really outperform the market in the long run. I think it might be a dividend trap. So let's see. SEB stock. What's this one? Seaboard. Oh, and UNH. Yeah, I remember AMD been over 100 many times. Yeah. So here's Seaboard. I don't know this company either. So a $3 billion company. The stock hasn't been doing much. You know, the stock is the same price that it was back in 2016. So you bought the stock in 2016. You're down on your money. So look at this. They're in commodity trading. And look, this is weird, you know, such a diversified revenue stream, you know, commodity trading. And then they just sell pork. Like, is that like they sell pork, marine? I don't know what marine is. Maybe something like water, liquid fuels. So this is really interesting. So look at that. Most of the revenue comes from the Caribbean, then Africa, then 23% US. So this is an interesting company. I got to do more research on them. The revenue is up 5% year over year. They did make some net income on that, which is good news. But, you know, I'd be careful here. You know, same prices they were in 2016. I mean, I'd be careful with that one. So what do you think of AG&C? I think AG&C sadly might be another yield trap. I mean, this one is another mortgage REIT. And actually, let me see the dividend here. So, yeah, you have a 15% dividend yield on this company. What's the net income? It's not terrible, but I mean, I just can't. I don't expect this. You buy this to maximize your dividend income. That's what it's kind of like a covered call ETF. You buy it to maximize your dividend income. You don't really expect to outperform the market with that one. What's your take on SRFM? So yeah, I don't have much thoughts on this besides the fact that Palantir is a huge shareholder now. So look at this. If you're wondering what happened, how this stock go from $1 to $9, up 16% the most recent day. Well, we go to shareholders right here. The largest shareholder is actually Palantir. Look at that. Palantir owns 13% of the company. So that's pretty impressive. Let's see. Oh, MRVO. So yeah, here's another chip play, Marvel Technology. This company is finally profitable. This is great news for them. So check this out. If we go to Marvel Technology, yeah, look at that. They design, develop, and sale of integrated circuits. So that's what they do. But look at this revenue. Revenue, incredible growth. Revenue is up 63% year over year. And look at the net income. They made 170 million on that. This is great news because they pay a dividend. You know, they pay a dividend, so they need to be making net income. Because if we zoom out, like look right here, it was a tough buy before today. I mean, look at this. They used to lose hundreds of millions of net income a quarter, but now they're finally going back to profitability. So that's great news. Yeah, hey Wesley, I don't know, are you able to go into the description? If you're not able to go into the description, this is yeah, hey, if you want to get this app I'm on right here, it's in the link tree it's in the link tree in my bio right there, the very first link. It's a brokerage, it's called Moomoo. It's my favorite app for analysis. It's my main app, you know. It is an affiliate link, so if you deposit some money, we'll both get some free stocks, so I'd appreciate that. But yeah. Let's see. What is this stock? AIFF, you know. Oh, and Apple, you know, I want to look at Apple too. So I might actually just skip this stock. Yeah, $38 million company, extremely low market cap. So look, the whole company's worth $38 million and they lost $12 million the most recent quarter, which is, it's just tough, man. So yeah, let's look at Apple right here. AAPL. So this is like the third largest company. I remember for a while, Apple was the largest company in the world. Now they're the third largest company. So check this out for Apple. We can see their smartphone market. I love this data we get on this app right here. But yeah, look at the smartphone market share. It's a 19%, really good. And you know, iPhone is half their revenue. You know, I'm on an iPhone. A lot of people are locked in the Apple ecosystem. So half the revenue comes from their iPhone. Then they have the services revenue. Whenever you go buy something in the App Store, Apple actually takes a 30% fee, and that's all high margin for them, man. And look at the services revenue. I mean, it's nearly $100 billion of annual revenue for them. So that brings the most of their bottom line. Then the Macs, wearables like the AirPods and the watch. So here's why also Apple is so heavily affected by tariffs. Did you know this? Only 36% of Apple's revenue comes from the US. They're a real international play, you know, 25% EU, then China. Yeah, hey, if you want to get this app, it's a brokerage. If you want to get it though, it's in the link tree in my bio, the very first link there. It's free. So yeah, Apple, I do like this one. I mean, the iPhone's the best product they'll ever make. You also get a nice 0.5% dividend yield here on Apple. And look at the net income they're making. They also have the biggest buyback program of any stock. They buy back $100 billion of the stock every year. But yeah, look at this net income. They're making 20, 30 billion in net income every quarter. So yeah, incredible metrics on there. And with that being said, guys, this is actually the longest stream I have ever done in my life. So my head really hurts, but I really appreciate you guys being here. Happy Sunday. If you want to hit the follow button, by the way, we go live every day. We do this live stream on Sunday, every single Sunday. And we also do live streams during the week as well. So if you want to hit the follow button, we go live frequently. And best way to support me, because I sell nothing. I don't have a book, a course, a Discord. I got nothing. The best way to support me is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, if you missed anything on the stream or want to replay it, you can do that on the YouTube play. So on the YouTube replay. So yeah, anyway, hope you have a great rest of your Sunday. Thanks again for all the follows and the likes. I'll see you guys later. And we'll check on how the S&P 500 is doing real quick. We're down 0.3% in the overnight market, and the SPY is down 0.4%. So the market might be a little red tomorrow, but yeah, Nvidia's green, Tesla's green. What about over here? Have a good night. Hey, question mark. Hope you have a great night too. See you later, man. Yeah, anyway, see you guys later. See you later, Burrito. Have a great rest of your Sunday, guys. See you later. All right. Did you look at Pfizer? Yo, Michael, we did look at Pfizer the first time you said it. I do. If you scroll back a little bit, you'll probably find it. Thanks again for being here, Michael. I do really appreciate that. My head hurts. I'm going to end the stream. Happy Sunday, guys. Hey, W. Panita. Thanks for. Sorry, I'm ending the stream right here, but.